Hi, Tina. Can you hear me? Hi, Tina. Can you hear me?
Good morning. We can hear
Super. Tina, can you hear me right now?
Yes, we can hear you.
I can see you, but I don't see any other participants. Oh, here they come. Okay. Maybe there weren't any other participants.
Let me change the view.
Well, I need to join as a
Good morning.
Good morning.
Just want to make sure you can hear me well.
Yes, thank you.
Of course.
Good morning, everybody.
Good morning, Mr. Chair.
Morning, Ann.
Front and center. You're in the hot seat. Do that. Can I put it in? Yeah. Sweetheart.
That is my morning. Yeah.
Aw.
Fun too.
I don't.
Mine's about to give up the ghost. It starts growling every once in a while. Yeah. That is such a good. Yeah, I know. Swirls and run around. That's what happened. The warranty expired. Did I tell you I closed my business?
No, did you really?
End of September.
So you retired, huh?
Yeah.
Good for you.
Not gonna run my business anymore, but
Yeah.
good
You
for
can
having
pick and
travel
choose
and
whatever you want to
yeah.
do. For all the grandkids, John.
Hmm?
For all the grandkids.
Oh, I love playing with my grandkids. I just went out to Indiana, spend a week. My two little granddaughters out there.
Nice.
My daughter moved back there a year ago. Made me so sad, but her 15 acres of forest, and I mean, I can't blame her.
Right.
Her husband has a great job. They have cute kids.
Nice.
Oh, so I have to let them go. Have them at my house this coming weekend. Be in Oregon, but they've just been moving and busy, and I haven't seen them.
We're in Oregon.
They just moved from Coos Bay to somewhere near Ashland.
Hmm,
Husband's a PhD and he teaches at college, like chemistry, biology kind of guy.
nice,
So the job takes him.
right?
A long agenda, a long meeting.
Fantastic. Okay.
5,000
Pages, yeah. Crazy. Commissioner Witt?
I don't see him. Oh, he's on his flight from Hawaii.
Oh,
That meeting in the air. Last call. For adopting that one about this. I don't heard this part. He's in and that, and all of us were in favor of it. He criticized it. Go ahead and let my membership go in and my name.
still in the taxpayers?
I don't know. I volunteered to do that. Cash will be an award again, so tie me in for another year, or another couple months.
Good morning, everybody. Tina, are we ready?
Yes, we are.
David Tran told me.
Good morning. This is the time and place for the Nevada Tax Commission. Today is December 5th, 2022. The time is approximately 9 a.m. First of all, I apologize that I am not there in person. Apparently, after 5 vaccinations, you can still test positive for COVID. And instead of bringing it to the room, I'm isolated where I am. So there you go. Tina, could you call roll, please?
Yes. Commissioner Littman,
Listen,
Commissioner Bursey,
Here,
Commissioner Rodifer,
Here.
Commissioner Brown,
Present.
Commissioner Johnson. I see him in Las Vegas. Commissioner Johnson, can you hear us?
Okay, I'm here.
Commissioner Byram
I'm present.
and Commissioner Witt is absent and Chairman Wren.
I am present. Thank you very much. Thank you, Tina.
Thank you.
Is there any public comment in Las Vegas? Seeing none, is there any public comment in Reno?
Yes, there is.
Okay. Morning. If you would state your name and spell it, please.
My name is George Ritz. Last name is spelled H-R-I-T-Z. Good morning, Chairman Wren and Commissioners. I'd like to thank you for your time this morning. I'm with, and again, George Ritz for the record, I'm with the Nevada Taxpayers Association. On October 3rd, I read comments and questions provided by members of the Nevada Tax Association into record pertaining to the proposed regulations on that meeting agenda. In November, I attended the Nevada Taxpayers Association Executive Committee meeting and proposed a process that would expedite answers from our members. Future Nevada Taxpayer Association inquiries will be submitted in advance to discussing at regulation workshop when comments are received following a regulation workshop. They will be forwarded to the Department of Taxation when received after a workshop. This should alleviate the tax commission receiving any regulation inquiries the day of the meeting. The executive committee for the Nevada Taxpayers Association supports this procedure. And I wanted to just thank you again for your time and have a great day.
Okay, thank you very much for your comments. Any written comments will be provided on the department's website. Any other public comment?
I don't see any other public comment.
Okay, thank you very much. Director Hughes is, I think, going to join us, but she is out with a cold. She assured me yesterday that it's just a cold and nothing else, but she wasn't feeling very good. So, Yvonne, you're going to take charge. We appreciate it. If you would provide the oath, please.
You bet. If anybody present here in Reno or Las Vegas, if you intend to testify today, could you please raise your right hand? And I'll read the oath. Do you swear or affirm that the testimony you are going to give today is the truth and nothing but the truth? If you do, please say I do. I do. Thank you, Mr. Chair.
Okay, thank you very much, Yvonne. First thing on the agenda are the minutes. Is there any comments, additions, and or suggestions?
Mr. Chairman, this is Sharon, Commissioner Byram. I would,
You only got to be one time last time.
I would have moved to approve the minutes as written.
Thank you. I have a motion. Is there a second?
Commissioner Bursey seconds.
Motion is second. Any further discussion? Seeing none, all in favor say aye.
Aye.
Aye. Opposed? Motion carries unanimously. Okay, brings us to the consent agenda. Is there anything that anybody would like to pull from the consent agenda?
Mr. Chairman, this is Commissioner Byram. I would like to pull items 3C1, Providence Dental, 3C7, Central Telephone, and 3E2, Landon John Matt.
Okay. Anything else?
Commissioner Wren, this
Yes.
is Commissioner Brown. I don't have anything I'd like to pull. I'd just like to make one quick comment if you don't mind. And that is, I appreciate the department's work towards resolving these waiver of penalty and interest under 10,000. It looks like those have been handled fairly expeditiously when that hasn't always been the case. But I did note that under the waiver of penalty and interest over 10,000, some of those cases go back to 2018. So to the extent that department's able to work on resolving those sooner, I think it's in the best interest of the department and the taxpayer.
Okay, I agree. Shelley's not here to address that. Yvonne, do you have anything on that?
Thank you, Mr. Chair. Yvonne Navarez-Goodson for the record. I don't currently have anything to address that, but certainly we'll work with Director Hughes to address those issues.
Okay, thank you very much. Anybody else want to pull anything? Could I have a motion then?
Commissioner Brown, I'd move to approve the consent calendar with the exception of items 3C1, 3C7, and 3E2.
Second.
Okay, I have a motion and a second. Further discussion? Seeing none, all in favor say aye.
Aye.
Aye. Opposed? Motion carries. Okay, let's go to 3C1. Commissioner Byron, excuse me.
Mr. Chair, may I have permission to address these out of order and go to 3C7 first? I think it'll make more sense that way.
Sure, absolutely. Go ahead.
Okay, 3C7 is Central Telephone Company. So I'm assuming someone from the state is here. This is a matter where there's a request for a refund in the amount of $11,000 and some. In the footnote, and I'm on page 326 of the 446 page part 1 of the consent calendar. And at the bottom, towards where it says that, it has in italics, it says approval of waiver will result in a credit refund of $3,193 due to the modified business tax credit, which offset to the SUT liability. That doesn't make any sense to me. It seems like if they have a credit on the books, they have a $3,000 valuable credit on the books. And we're talking about another $11,000 potential credit or refund. So they have something worth $14,000. And what they did is they're taking a credit from one, reducing the credit from the other, and then offering to pay the difference of $3,000. So I would like to understand why they would take a tax credit from one tax and use it in this manner. It makes no sense. The math doesn't work.
Okay.
It appears to me they should reinstate the $3,000 credit from modified business tax and then refund or credit the $11,214 if we approve this.
Okay, do we have Ms. Arceo in Las Vegas?
For the record, Lizette Arceo for the department. I just want to just quickly add that we're having unstable internet, so we keep getting frozen. So it's been coming in and out. So I want to say I understood Commissioner Byram's question, which is regarding the credit. Why we would issue a credit?
No.
Okay.
You can either do a credit or you can do a refund. Either way, the taxpayer has something valuable. For their modified business tax, they have something valuable worth about $3,000. And for this waiver, they have something valuable worth $11,000. And together that's $14,000 of credit or a refund that they should have. But instead, you took the credit for modified business tax and reduced the potential credit from sales and use tax audit.
Again, for the record, Lizette Arceo. Now, the credit would only be $3,193.50 because that's all that they have paid towards the penalties and interest for the modified business tax. So the actual amount due for the modified business tax is the $11,214.76. That has since reduced to about, give or take, $7,000 because they haven't paid all of the penalties and interest for the modified business tax period. Now, as far as it being carried over to the sales tax, in statute, the department has that if a taxpayer owes money on any other tax type, it has to offset first to those tax types, issue a credit or the refund to the taxpayer.
Okay, so there isn't any way to understand that reading what we received. So if that were to happen, this is an unusual one. We don't usually see an offset like that on our documents, but that probably would be helpful if that was explained in the document that we get, because it looks to me like they're not receiving the full benefit of two separate credits. But if that's your math.
I'm sorry, the internet again keeps coming in and out. So I apologize.
Commissioner Byram, I think the confusion is the word credit. So I think the credit in one context is an asset, as you've described, and in another context, it's a liability. So I think that's the confusion. So
well, they'll receive a credit because a credit was applied.
The credit is going to reduce the liability. That's correct, Ms. Arceo?
For the record, Lizette Arceo, yes, it would offset to the sales tax.
So yeah, credit unfortunately can also be, when you look at debits and credits, a credit can be a liability, but then when we think of credit as a refund, that's just that's the ambiguity of that term. I'm teaching accounting for lawyers next semester, so I've been thinking a lot about this.
I was an accountant before I became a lawyer, so I'm just trying to also understand why the creative math without an explanation. So All right, well, assuming that's correct, I'll stop objecting to it. And I'll move to approve item 3C7 from Central Telephone on the consent agenda.
there a
Commissioner
second?
Whitman seconds the motion.
Motion and a second for the discussion. Seeing none, all in favor, say aye.
Aye.
Opposed? Motion carries unanimously. Thank you. Sharon?
On item 3, C1, Providence Dental, a very similar item. So on page 191 of 446, there's a resulting amount of, the resulting credit is different from the credit we're approving. So there's $4,400 credit that they're going to receive. We're approving a $15,000 waiver, and there's no explanation as to why it's different.
I'm sorry, what page are you on?
I'm on page 191
Thank you.
towards the bottom.
Ms. Arceo?
For the record, Lisette Arceo, tax manager for the department. The scenarios, as Commissioner Byram said, is very similar to the last one. In this case, the taxpayer has already paid $4,414.34 towards the penalties and interest for modified business tax in which they're requesting the waiver. If the waiver is approved in full, because they've paid that amount, once we've reduced the liability for the penalties and interest to zero, it would create that credit of $4,413.
I understand. And I would move to approve item 3C1.
Commissioner Brown, second.
Okay, there's a motion and a second for the discussion. Seeing none, all in favor, say aye.
Aye.
Aye. Opposed? Motion carries. Okay, 3E2.
Mr. Chairman, 3E2 is Landon John Mant. And I'm on page 124 of the 718-page document that is consent, the other consent calendar document for OIC matters. In this document, in the second paragraph, do you want me to wait a minute?
Yeah, I'm not quite there, just a second. Okay, go ahead.
Okay, in the second paragraph, the offer is to pay a total of $8,395.62. And then the actual offer then is to pay $7,882.98. And so those two amounts are different. And when I get to, let's see, page 133, there's an email that says the amount is $7,882.98. So which is it that we're approving? I mean, there's an amount that's an offer, and then payments can be made toward it that are just make it the remaining balance. But the offer is the offer, and payments can be made to it, but we're still approving an offer amount.
Okay, Ms. Arceo?
For the record, Lisette Arceo for the department, and that is an error on the department's part. Usually we do put on that second paragraph the amount that has been paid already towards the offer, and then we state it's a remaining balance, but the offer is for the $8,395.62. That was the tax balance, and as Commissioner Byram stated, they have made payments towards their offer, which is the reduced amount of the $7,882.98. So again, that was a department error. The offer is for the $8,395.62.
Okay, I will move to approve item 3E2, Landon John Mant, with the understanding that the total offer to pay is $8,395.62.
Commissioner Bursey seconds.
Okay, thank you. We have a motion and a second. Further discussion? Seeing none, all in favor say aye.
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 Opposed? Motion carries. Okay, anybody that is in Carson City or in Las Vegas that was on the consent agenda, we have finished with all of those, so you are free to leave if you'd like to. Yvonne, next.
Yes, thank you, Mr. Chair. Next on our agenda is going to be our Local Government Services Division. And first on our agenda is the consideration of the Administrative Law Judge's recommended decision regarding an appeal of a property tax abatement pursuant to NRS 361.4734. That case is Carl F. and Rebecca M. Hayford. And for the department, we have Deputy Director Jeffrey Mitchell.
Morning, Mr. Mitchell.
Good morning, Mr. Chairman, members of the commission. Jeff Mitchell for the record. As indicated, this is an appeal of property tax abatement, which is...
Taxpayer's case.
We don't have a taxpayer.
Yes.
Okay.
I'm going to introduce both parties and then step away from the table here. With this, the Department of Taxation really isn't a party to the appeal, but the petitioner and the respondent. The petitioner, Mr. Carl Hayford, is in attendance, as well as Miss Laura Zimmer from the Washoe County Assessor's Office. With that, I will step away, and Mr. Hayford is welcome to come to the table as the petitioner.
Okay, thank you very much. If you would give us your name and spell it for the record, please.
Yes, my name is Carl Hayford. Carl spelled with a C, Hayford spelled H-A-F-E-R-D.
Okay, this is your appeal, so go ahead.
Just make a brief remark. The primary residence status for the identified parcel has been established and not contested, as well as an attempt to set the status on the online system in May of 2015. We request that the abatement level be calculated based on the primary residence status of the parcel, which we believe is in line with the intent of the law. We've provided details for the individual circumstances in writing, and we appreciate the team members representing Nevada and Washoe County who facilitated this process.
Okay, thank you very much. We have somebody from Washoe County.
Stay here.
Good morning. My name is Laura Zimmer. It's L-O-R-A. Last name is Z-I-M-M-E-R. And I'm here on behalf of the Washoe County Assessor's Office.
Okay, go ahead.
Thank you. From the Washoe County Assessor's standpoint, we're required to mail a claim form to each property owner for residential to be able to claim their property as a primary residence or as a rental, which we did do that in 2015. Earlier this year, Mr. Hayford did supply some screenshots or images that he did go to our website in 2015. However, the form was not submitted online. It did not come through to us. Since that year, 2015, and I've provided this detail, so I'm just going to summarize. We have sent multiple notices through an additional form, through our value notices, through the tax bills to show that the tax cap for this property was receiving the high tax cap. The statute requires that you have to either file the form or appeal it by June 30th of each fiscal year. And so we did receive an appeal form in April of 2022. And so we did apply the low cap for a primary residence for the 2021-22 fiscal year, since that was by the June 30th deadline. But we did deny going back to prior fiscal years, going back to 2015.
All right, thank you very much. Is Ms. Bordelove, are you here, or Ms. Harris? One of the two, I guess.
Yes, I'm here.
Okay, so I don't remember exactly, but I think that the statutes and regulations only allow us to go back so far under certain conditions. I'm not sure we can even consider anything past these current dates. Can you address that for us?
To double check, as far as the regulations are concerned, I would have to double check with Ms. Bordelove to let you know for sure. But in the event you don't feel comfortable, then I'd recommend not moving forward with any action on the agenda item unless that is addressed.
Okay. So Ms. Bordelove's on my screen, but I take it she still is not present. Emily Bordelove is there.
I'm present in Las Vegas, Rosalie Bordelove. I'm here in Las
there we
Vegas.
go.
I was getting myself connected to internet and up to speed because I was in a little later, and that's why I've got Chrissy on here. But I can help address that some. I'm not completely connected, but if it's an issue specific to one of your regulations, I think I'd want a little bit more time to take a look at it. And you could also get opinions from both the parties on how far you can go back. But yeah, if like I said, if you're unsure, that what Chrissy said is correct, that holding off is something you can do. You could also, if you want to push this one to a little later in the agenda to give me a little time to look into the regulations, I can do that as well.
Okay, well, I'll leave it up to the commission. It's one of those cases where I always feel sorry for the taxpayer, when there's an error, but the error apparently is their fault. But I always like to, lead in their direction if possible. But I think there's only so much we can do. So, any other comments?
Commissioner Lippman, I have a question, but I also see Commissioner Byram does as well. So
go ahead.
Okay. I did not see any place, although I'm sure the taxpayer has monetized it. What is the amount of taxes that you believe you've overpaid?
To date, on the order of $1,000, which is not the primary concern. When I look over time, the compounding interest, I calculated that approximate over my lifetime, if I remain in the property and live, would be amount to on the order of $30,000 plus.
So that I don't understand. So the difference that you're looking to be refunded, because if it is refunded, if we have that opportunity, we probably would not give you interest on it because arguably it is your technical error.
I totally agree. I think what is reasonable, in my opinion, is the funds that we've already paid above the abatement to date. I would not really be worried about asking for them back. So the 1,000 range, I'd say that due to the error or the issue, that's already under the bridge. But I'm more concerned about the compounding interest over time. So each year it gets larger and larger, the magnitude of this error. So if the next roll were to be adjusted in line with the primary residence status of the parcel, that would seem reasonable to me. And the $1,000, it's like, okay, it wasn't addressed for that time, and that's under the bridge.
So what the remedy you're proposing is that we compute your property taxes as if on a going forward basis, as if it was a residence, which we know in fact it was since the day, since 2015.
Correct.
And so is that difference about $1,000 at this point?
Yes,
okay.
in that range.
Okay, and then another question. I am pleasantly surprised that you had screenshots from 2015 when you attempted to online submit your residence claim. I read from the record that that the department was able to verify that. So is that accurate? Is it?
Laura Zimmer on behalf of the assessor. I was not able to verify that he was on our website, but he apparently took some screenshots, and it is the wording from our website, and he emailed them to himself. It was never sent to the assessor's office until May of 2022.
And if I may.
Yes, please.
So there's like a PIN code that is sent by mail that you need to access to get into the site. So the fact that I had the contents of the actual website proves that I did receive and use that PIN code. It's not like just publicly available, the form. And the email that I sent to myself is dated, so that was May 15th, 2015.
So you were doing that just to
14th,
verify to yourself that you submitted that?
Correct.
I have a quick question for Ms. Zimmerman, if you wouldn't mind.
Sure.
Commissioner Lippman. So for the Washoe County, were the taxes readjusted to the appropriate abatement, or did you just change them this last year?
The taxes were adjusted for the 2021-22 fiscal year. And then the current 2022-23 fiscal year was calculated with the new abatement from the beginning, but last year's were recalculated.
So if you had adjusted them back to 2015, wouldn't have that been more appropriate if you were in error of the abatement?
Yes, but I don't believe that the form was actually submitted to our office. There is a step at the end where you have to submit that PIN number that Mr. Hayford was referring to as an electronic signature. I have verified we still have all of our downloads from 2015, and I do believe our system was working. I believe I mentioned for that fiscal year, we received 6,865 claim form submissions. And on the date that Mr. Hayford visited our website, we received 416 filed online that day. So I do believe our online submission system was working. I just don't think that final electronic signature and submission was completed at that time.
Okay, thank you. Commissioner Lippman, were you finished?
Yes, I was. And I think that the taxpayer is pretty much agreeing that he perhaps didn't press the last button. And anyone in this room who has never done that at a computer program, when you get to the last step, you just don't see the submit. And I think the department has indicated they sent many subsequent letters and notices, but just because the taxpayer thought they had submitted it, didn't pay that much attention.
Okay.
So now I'm done.
Mr. Byron?
Yes, I have a question for Ms. Zimmer. What year did you set as the base year when you made the adjustment this past year?
It would have been a carry for, it's a tax cap from the year prior. So it would have been from 2020-21. So whatever the taxes that had been paid that year, because he was still getting the general abatement, the high tax cap.
Can you reset the base year to 2015?
I'd have to check with the treasurer's office because they actually do the calculation. But if
that's just a matter of whether your system will allow you to, but that sounds like the resolution. He operated in good faith. He used the form, has proof he used the form. He didn't do it the next year because he thought that he had already taken care of that. And maybe he should have seen the wording on his tax bill when it came through. But I believe he operated in good faith. He's not asking for a refund of money that's already been distributed and spent by the local government. He's asking for his base year value, his base year to be put back where it should have been when he initially intended to submit it. It should have been, the base year should have been 2015.
The only calculation that I'm aware of is we would be changing the status for those years. I don't know if I would have to verify with the Washoe County Treasurer because they do the calculation. But if they calculate it back that far, I believe that they would end up recalculating every year forward, and I don't know the answer to whether or not they can do that without issuing a refund. I don't know if that's
It makes sense.
from ours.
Yeah, and it makes sense that the refund, can be since it was brought to your attention for the past year or 2 years, but to reset the base year value would solve the problem. That's what would solve the problem. So
yeah, and
can you make a phone call and come back to us if we were to table this for a few minutes? And
I can try. Yeah. I mean, we were addressing the appeal of the fact that we denied the petition to change the tax cap status, because that's what the assessor's office determines.
Right.
As far as changing a base value, I would have to verify with the treasurer. It's a separate issue.
Part and parcel of the calculation of the tax cap is the base year value.
Right, so I would have to check with the treasurer's office who does the calculation.
Okay, I would agree on that. Thank you, Shannon. That's kind of what I was asking or alluding to. Mr. Mitchell, anything you want to throw on here? Shall we check with the treasurer?
I'll just kneel. Jeff Mitchell with the Nevada Department of Taxation. And as mentioned, the department isn't really to provide testimony in regards to the petitioner or the respondent here. But I would caution that going back past the statutory deadlines to adjust the base year, if there's further appeals that come past this, when people are questioning the primary abatement, those deadlines have already been set in statute. And to go past those, I just want to make sure that we're proceeding with caution and addressing that issue. And so I believe Ms. Boardlove was going to be looking in regards to that as well, in regards to statute and regulations. So I just wanted to make that note.
That's good to know. And so if, a lot of times I'm on a board of equalization as well, you have your window of time you can appeal, and then you can't appeal. But if you find that there was an error, if you find there was a mathematical error, an error on the government side or whatever, then you can go back a little further. So there's a little bit of
correct
room in there. So I would like to hear what Ms. Boardlove has to say about it. But I think the solution is to reset the base year value. If we have to reset it in 2018 in order to be in statute, it's better than 2021, the way the prices have been going. So I think the best we can do to have a compromise that satisfies Mr. Hayford would be the appropriate thing to do. I think he operated in good faith. We're having glitches with our Las Vegas connection. Glitches happen. I live in Elko. I have squirrels running my computer. I'm always glitching. So I know things happen. And I just think that we ought to be able to come to a solution where he gets his base year value back as close as he can to 2015.
Okay, I agree. Why don't we table this, give Washoe County opportunity to check with the treasurer and Ms. Boardlove an opportunity to check, which was my original question, how far we can go back. Is that fair?
For just a few minutes or for an hour or to another meeting?
Well, I was thinking until the end of this. Ms. Boardlove, how much time do you need?
More than a few minutes, probably, unless there's, as I'm still kind of familiar, property taxes are not my specialty. So if you guys are aware of this specific area where all those limits are, that would be helpful. But I'm also kind of just reviewing the abatement provisions in Chapter 361 and in general.
Yeah, and I'm not. I remember that from my years on the Board of Equalization, as Sharon was alluding to. There's just so far we can go back. I guess to be fair to everybody, perhaps we should just table it to the January hearing.
You all right?
Sure. No, I can just state that in the documentation, there are statutes, and the administrative law judge did state that it is feasible to retroactively make such changes. But yes, I agree. Having this looked into makes sense. But yeah, in the documentation, I believe the answer is there as to whether it can be done.
Oh, the answer is definitely there someplace. We just need to find it. We need time to.
Got it. Yes.
Okay, so
Okay.
And I would just go on record, Commissioner Lippman, as saying that the administrative law judge for Ms. Boardlove did analyze this very thoroughly in her decision, but yet there is an appeal right to the Nevada Department, the Commissioner of Tax, so the Commissioners of Tax. So I think procedurally we're moving in the right direction. But I would appreciate getting the thumbs up from Ms. Boardlove. And I do agree with Ms. Commissioner Byram that the resolution the taxpayer is asking for, and it wasn't clear to me, but now it is to just reset the base year, acknowledging that there were some technical errors. And I think the Washoe County Tax Department has affirmed with great detail that they didn't receive it, but that, as Commissioner Byram said, these technical difficulties unfortunately do happen. And I think this is a good note to everyone to take screenshots of your submissions.
Okay. Yeah, I think we probably have the ability to do what we want to do, but let's make sure.
Mr. Chairman, I would make a motion to table this matter until our January hearing.
Okay.
Commissioner Lippman seconds the motion.
Okay, we have a motion and a second. Further discussion?
Mr. Chairman, this is Commissioner Rutherford. I just would point out for the record, there is a comment in footnote 31 of the administrative law judge's decision in which she discusses there is a 3-year limitation with equitable tolling. So if equitable tolling were to apply, assuming that her analysis is correct, you could not go back any further than 2018. But I don't know, maybe that's the starting point for the Attorney General's office's analysis.
Yeah, but in my recollection, I think that's probably all we can do also. But I'm not positive. Okay, further discussion? Okay, all in favor say aye.
Aye.
Opposed? Motion carries. Thank you very much. We will see this again in January with a resolution, I hope. Okay, Yvonne?
Yes, thank you, Mr. Chair. Next on our agenda under our Local Government Services Division, Section 4 is going to be Part B, which is our taxpayers' appeal of the treasurer's denial of a waiver of penalty and interest per NRS 361.4835. We have 2 cases under this matter. The first is Laura Lake. Again, to give us an overview is Deputy Director Jeff Mitchell for the department, and then we will call up the parties.
Okay, thank you, Mr. Mitchell. Just before you go, Tina, I've got a couple extra people and phone numbers on my screen. Do you have everybody logged in that needs to be logged in?
Yes, I believe the one that just came up, the 702, is Clark County for this upcoming matter.
Okay, perfect. Okay, Mr. Mitchell, go ahead.
Thank you, Mr. Chairman. Jeff Mitchell for the record. Under agenda item 4B, the taxpayer appeal of treasurer's denial of waiver of penalty and interest. This deals with NRS 361.4835 when penalty or interest has been applied to a late payment of property taxes. The first appeal is to the Clark County assessor or treasurer, depending on the type of property tax bill. And based upon that decision, they have an appeal right in front of the Nevada Department of Taxation. Again, the department isn't here to provide testimony for the petitioner or the respondent. Both have been noticed. Under number 1, Laura Lake is the petitioner and the respondent is the Clark County treasurer. And I believe Mr. Ken Diaz is joining us by phone, but I don't believe he was here to be sworn in when we did this swearing in.
Okay, is Ms. Lake present?
If Ms. Lake is on Zoom, you may raise your hand. Otherwise, I don't see her.
Okay, I don't either. Okay, so Clark County, have you been sworn in?
No, we have not.
Okay, Yvonne?
Okay, is this Mr. Diaz on the phone?
It is.
Terrific. If you could raise your right hand, please. And do you swear or affirm that the testimony you're about to give to the Nevada Tax Commission is the truth and nothing but the truth?
I do.
Thank you.
Okay, go ahead and proceed, sir.
Okay. There are two of them. This one is for Laura Lake, and Miss Lake has two properties that we know of here in Clark County. She is requesting her penalty waiver. Her penalty to be waived is $10.76, and what she's stating is that she did not receive notice. Well, what had happened was in October of 2021, we did send her a past due notice, and in that notice, it included what she owed for October's installment, what she owed for January's installment, as well as what the total amount that she would owe for the entire year, which would have included what she would have owed for March. And so she was noticed, and what she chose to do when she received that past due notice in October was to pay October's, and then she paid January's, but she did not pay the full amount to include the fourth installment, which was March. And at that time, she also did not request a duplicate bill, and there was no return mail that came to us letting us know anything else that may have been an issue. And so what had happened was she didn't pay the fourth installment, and then she came back and she subsequently paid it, and then she asked for us to waive the $10.76, stating that she was not noticed, but again she was noticed back in October of 2021.
Okay. Any questions from the commission? Okay. Do we have a motion on taxpayer appeals Laura Lake?
Mr. Chairman, Commissioner Byram, I'll make a motion to deny the waiver of penalty and interest in the matter of Laura Lake.
Commissioner Bursey seconds.
Okay, thank you. I have a motion and a second. Further discussion? Seeing none, all in favor say aye.
Aye.
Aye. Opposed? Motion carries. Next case, go ahead, sir.
Did you want us to speak, or was the person there to speak first?
I'm sorry. Yeah, I apologize. Is Jason Carvalho present?
Chairman Wren, if he's not present in Las Vegas, I don't see him on Zoom. Mr. Cavallaro, if you're on Zoom, please raise your hand. And I don't see him.
No, I don't either. He's not on my screen. So Clark County, go ahead.
Okay, very good. Yeah, the second case is related to Jason Cavallaro. He purchased this property in question in 2021, and keep in mind he's had properties here in Nevada before, so he is a knowledgeable taxpayer. This is a rental, and what had happened was back in 2021 when this was recorded, the address was that it was recorded to was the address of the property, and so that's where we sent the property tax bills, and so he was delinquent for all four installments, and he did receive a penalty waiver letter, and then he responded back to us letting us know that he inadvertently noticed that his address was wrong, his mailing address was wrong, and he fixed it with the assessor's office back in March of 2022. But that was, unfortunately, that was after all 4 installments were already due and past due. And so with this one here, we typically don't do this, but we actually gave him, we waived the first installment penalty, but we really should not have done that because he is a knowledgeable taxpayer. And so I guess he's requesting for the rest of it to be waived as well. And so we didn't waive the rest of it.
Okay, discussion from the commissioners. I'd entertain a motion.
Mr. Chairman, I move to uphold that treasurer's denial of the waiver penalty and interest for Jason Caballero.
Commissioner Bursey seconds.
Yeah, a motion and a second for the discussion. Seeing none, all in favor say aye.
Aye.
Aye. Opposed? Motion carries unanimously. Okay, thank you very much.
Thank you for your time.
Thank you. Yvonne?
Yes. Thank you, Mr. Chair. We'll now move on to section 5 of our agenda, our compliance division. First on our agenda, part A is the department's request for approval of a motion to dismiss taxpayers' appeal and affirm the decision of the administrative law judge. Our first case is Sabrina Filippo, sorry, mispronouncing that. Also known as Sabrina Berthelsen, gosh, both names, sorry. And for the Nevada Attorney General's office, we have Deputy Attorney General Amber Scott.
Okay. Ms. Scott, go ahead.
I don't know where Ms. Scott is.
Well, I don't either. Would you like us to go to the next one while you look for her?
Sure, Mr. Chair, we'll go ahead and table that matter for now. And under the same section A, we'll go to our next case, which is which involves Vincent Bartello. And for the Nevada Attorney General's office, we have Deputy Attorney General Richard Yen.
Okay, thank you very much. Morning, Mr. Yen. If you would identify yourself and spell your name, please.
Good morning, Chairman, members of the Commission, Deputy Attorney General Richard Yen. My last name is spelled Y-I-E-N.
Okay, go ahead.
And this is an appeal from an order imposing personal liability. There have been some developments since noticing the Commission on this motion to dismiss. Attorney for the appellant communicated to me on Friday afternoon that he was wishing to withdraw the appeal. His name is Brian Dixon. I believe he's maybe a member.
And I am present here in Las Vegas as well.
So I believe he can confirm the same. And the Department of Taxation is willing to accept that withdrawal.
Okay, Las Vegas, I'm sorry, identify yourself, please.
Correct. Brian Dixon, B-R-Y-A-N, Dixon, D-I-X-O-N, on behalf of taxpayer Vincent Bartello and the taxpayer Hillsborough Enterprises.
Okay, and what are you wishing to do?
So I was recently engaged on this, but I had previously been asked to do a review. I had given a recommendation to withdraw the petition, which had been submitted under a prior representative. It looks like when that representative withdrew, no action was taken. So as my firm was recently retained, I took a look at this matter and suggested that for the sake of efficiency, just be withdrawn But of course, this is last minute. So I just wanted to make the request. That might be the most efficient way to wind this matter up.
Okay, go ahead, Commissioner Bursi.
I have a question for Mr. Dixon. If I have taken my notes properly, there's a very big deficiency here. It looks like, am I wrong? Almost $4 million?
Correct. It's a significant deficiency.
So my question is, with that kind of a deficiency, you're moving, or you're asking us to dismiss the appeal. What are you planning to do going forward?
So the issue is, there are issues as to the correct amount of the liability, but that will have to be addressed in equity. We've missed the procedures for that. So once the assessment is made on him individually, he has the ability to work with the department through an offer and compromise, providing the records both as to his current economic status as well as to inequity address the overall assessment and just address it that way. But under the statute, it does look like that the ALJ's decision complied with the black letter law of the statute.
So he's not disputing then, the taxpayer's not disputing that he has personal liability for the deficiency. It's just the amount that you're looking at. You want to go back and work with the department on that.
I would say that he does dispute it, but we're reaching a procedural issue to say, look, do you want to spend the time and effort fighting it at this level when it looks like it'll be more efficient to address it in a subsequent procedure?
What subsequent procedure are you talking about?
That would be the offer and compromise.
Thank you.
Mr. Chairman, this is Commissioner Byram.
Go ahead.
We're agendized to whether or not we're going to approve the motion to dismiss and affirm the decision of the administrative law judge. And I would take the testimony of this party as just not opposing our motion. But since this is how we're agendized, I think that would be the appropriate motion to make, would it not?
I think so. Ms. Bordelove?
Yes.
In that case, Mr. Chairman, I would move to approve the motion to dismiss the taxpayer's appeal and affirm the decision of the administrative law judge in the case of Vincent Bartello for the debts of Hillsborough Enterprises.
Okay. You have a second?
Commissioner Bursi seconds.
Okay, have a motion and a second. Further discussion? Seeing none, all in favor say aye.
Aye.
Aye. Opposed? Motion carries. Okay, thank you very much. Good luck on that one. So do we have Ms. Scott?
This is Tina Padovano. I sent her an invite last week and one again this morning, but I don't see her on Zoom. And I'm guessing she's not in the Las Vegas conference room.
Chairman Wren?
Yes.
Good morning. This is David Pope. I've been in contact with Ms. Scott and she said she's almost there. Her navigation system took her to the old Henderson location. And so she's on her way.
Okay, great. Well, we'll just pass by that and watch for her. Let's go on to BD and we'll come back to A1.
Thank you.
Perfect. Thank you, Mr. Chair. Moving on to Part B of Section 5 is the consideration for approval of proposed findings of fact and conclusions of law in accordance with the 8th Judicial District Court's order for a limited remand dated October 17th, 2022, pursuant to NAC 360.188. Under this section, we have case Nevada Health and Bioscience Asset Corporation. And on behalf of the department, we have Senior Deputy Attorney General Andrea Nichols.
Okay, good morning, Ms. Nichols.
Morning, Chairman and Commissioners. This matter was remanded back from the 8th Judicial District Court for the commission to issue findings of fact and conclusions of law, and I submitted a proposed decision. I believe Mr. Dixon represents Nevada Health and Bioscience Asset Corporation, and he did convey to me that he has no objection to our proposed decision.
That is correct.
Okay, thank you. Any questions from the commission?
Commissioner Lippman moves to approve the findings of facts and conclusions of law in accordance with the 8th Judicial District Court's order for limited remand in the matter of Nevada Health and Bioscience Asset Corporation.
Second.
I have a motion and a second for the discussion. Seeing none, all in favor say aye.
Aye.
Aye. Opposed? Motion carries unanimously. Thank you very much. Yvonne, let's go on to C1.
Yes, thank you, Mr. Chair. Under this item, we have several cases for taxpayers' appeal of the administrative law judge's decision pursuant to NRS 360.245 and NAC 360.175. Our first case is Marquis Motor Coach. And again, on behalf of the department, we have Deputy Attorney General Natasha Gabriel.
Okay, thank you. Do we have a representative from Marquis Motors?
Good morning, Chairman. This is Kimberly Maxon Rushton with the law firm Cooper Levinson, appearing on behalf of Marquis Motor Coach.
Mr. Chairman?
Yes.
This is Commissioner Johnson. I need to recuse myself on matter C1, Marquis Motor Coach. We previously represented in an unrelated matter, but we previously represented Marquis Motor Coach.
Okay, very good. Thank you very much. Can I get the representative to restate her name and spell it for the record, please?
Yes, sir. Kimberly Maxon, M-A-X-S-O-N, Rushton, R-U-S-H-T-O-N.
Mr.
Okay.
Chairman?
Yes.
Mr. Chairman? This is Commissioner Brown. I would just disclose for the record that I believe Ms. Rushton, Maxim Rushton, was a roommate of my wife in college 30-some years ago. I haven't had contact with her since, but I would just like to disclose that.
You want to admit to that?
I guess I'm proud to say that there are a lot of graduates here from the University of Nevada, Reno, and so considering how long it's been, I don't think that there's a conflict or any concern.
Okay, I don't either. Thank you. Go ahead.
Good morning, Chairman, members of the Tax Commission. As the record reflects, this case has a long, somewhat tortured hearing, starting as far back as August of 2015, at which time the Livery Operators Association, of which Marquis is a member, sought clarification of the tax code at issue and specifically appear at the only reg hearing that's been had on this statutory scheme. At that time, we asked for clarification specific to what I would say is a linguistically challenged statutory scheme. Specifically, what is the taxable event? What constitutes a connection as it applies to common motor carriers and taxi cabs? As noted in the briefs that you have before you, it's very easy to understand that specificity as it applies to TNCs. However, it is not consistent with the way that common motor carriers in Nevada operate. And so for those reasons, we sought specifically to challenge the matter on a legal basis, beginning first by asking for an advisory opinion from then Director Conteam, and then following it up with a request for a hearing. In response to this, I would note for the edification of the commission that the actions of the Department of Taxation have, in my opinion, violated clearly the Taxpayer Bill of Rights. And what I mean by that is that when we specifically raise this as a legal issue dealing with a preemption clause, it resulted in 2 lengthy audits of both Marquis Motor Coach as well as an unrelated company called Grayline. And as a result of that, we ended up with a penalty that was assessed against Gray Line, even though Marquis requested the redetermination. In addition to that, members of the commission, the Department of Taxation construed the acts of both Marquis and Gray Line to be consistent with that of a transportation network company such as Uber or Lyft. How they reached that conclusion, I do not know. But then they followed it up with the Nevada Transportation Authority and requested that citations be issued against the companies for operating without the correct authority. Those citations were ultimately dismissed. And eventually in 2021, having started this matter in 2015, we were afforded the right to a hearing. And as your record reflects, at the hearing, it was very clear that there was a dispute or discrepancy between the industry representatives, Mr. Brent Bell and Mr. Paul Garcelle, and the Department of Taxation relative to both who is the taxpayer under 372B.050 and what is the taxable event. And as the evidence in the hearing demonstrates, you have different opinions as to who is the taxpayer, and you have three different opinions as to what is the taxable event. First, beginning with Mr. Bell, a seasoned industry leader who testified to the fact that there is no way to calculate the 3% excise tax on the total fare until the conclusion of the transportation trip. That is the logical conclusion relative to the taxable event. However, during the hearing, we had two representatives from the Department of Taxation, both the audit manager and the audit supervisor, state that they believe the taxable event to be one, when the ticket was sold for the trip, and two, when the passenger connected with the vehicle. So you have three different opinions relative to the taxable event. In addition, as it applies to the taxpayer itself, you have a determination or a statement or evidence from Mr. Bell that is clearly a common motor carrier as identified under NRS Chapter 706. That whole statutory scheme specifically deals with common motor carriers and contract carriers. However, as the commission is aware, the ALJ previously had determined that a non-certificated carrier, Grand Canyon Transportation, was in fact a taxpayer. So now we have an ALJ decision in which you define the taxpayer as something other than what's defined in 706 and clearly set forth in the law 372B. And you have a seasoned industry representative, Mr. Bell, claiming that as a licensee, he is responsible for the tax. And so based on this, what began as originally a preemption challenge.
I'm sorry to interrupt. There's a lot of paper shuffling. I can't hear. Thank you.
So what began as originally a preemption challenge specific to what is referred to as T21. It's the Transportation Equity Act of the 21st century, which was codified in 49 USC 14501 and 14505. Those provisions specifically preempt a state from taxing charter bus operations, excuse me, and interstate operations. So that initially was the basis for the request for the refund and redetermination. But then as the evidence deduced it, the hearing demonstrated, you have clearly three different interpretations as to the taxable event, multiple interpretations as to the taxpayer. Accordingly, that constitutes void for vagueness. And as a result of it, on behalf of Marquis, we would respectfully submit that the statutory scheme 372B is legally infirm. It's unconstitutional, being void for vagueness, and it's preempted specifically pursuant to 49 USC 14501 and 14505. And based on that, we would respectfully request that the hearing officer's determination to not refund the excise tax amount paid by Marquis Motor Coach be reversed and that the Marquis be made whole. And most importantly, that this commission determine that the statutory scheme promulgated in 2015 is void for vagueness and is otherwise creates a clear preemption for the state as it applies to charter bus operators. And with that, I'd be happy to answer any questions the commission may have.
Okay, thank you very much. Do I have questions from the commission? Okay, doesn't appear so. Ms. Gabriel?
Thank you, Chairman and Commissioners. Turning to directly the taxpayers' arguments, first we have the void for vagueness. So while this commission cannot void a statute, they can determine whether a statute was applied correctly to a specific taxpayer. And here we have a statute, NRS 372B150, that was applied correctly to a taxpayer. As to who the taxpayer is, I would point this commission directly to the ALJ's final decision. The ALJ's final decision in this matter, it defined who the taxpayer was, did not, and reversed the department's audit of this taxpayer, and the department never appealed that decision. So the issue before you is only the issue of a refund request by Marquis. When we look to NRS 372B150 as applied to Marquis, we see that it's correct. They are, as stated, a common motor carrier of a passenger. And so under both NRS 706041 and NRS 372B030, they're a person under NRS 0. They are held out to the public as a common motor carrier. They own the vehicles. The transportation was from place to place. And they are the operator because they hold an ownership interest in the buses. As to the connections, I would point this commission to page 14 of the ALJ's final decision. So while there was much discussion about connection, the ALJ's order was very clear. The connection is a physical time and place. It is when the passenger boards the bus in Nevada. And the dispatch portion is, for example, if a passenger is sitting in California and they purchase a ticket for a tour on Marquis and the connection happens in Nevada and the ticket is paid for, but the passenger then connects to the bus in Nevada, that's what Nevada is taxing. It's the privilege of doing business in the state. So it's not transportation of itself. And that's also seen in the plain language of the statute where we tax 3% of the total fare rather than the gross receipts. And again, it's the connections that happen in Nevada. So if the connections happen in California, Nevada doesn't look to tax those connections. That's not the intent of the transportation connection tax. As far as preemption, we don't have preemption here because under 14501A, the transportation connection tax does not relate to scheduling. It does not impose a tax on the rates, and it does not regulate the authority to provide transportation. We are only looking to when a passenger is connected physically to a passenger when the bus driver is connected to a passenger inside of Nevada. As far as 505, excuse me, that's again, it's not preempted because it's not imposed on the passenger. It may be passed on to a passenger does not signify because it doesn't change the ultimate taxpayer. And we have the 20th Century versus United States case that specifically says that just because a tax may be passed on doesn't change the ultimate taxpayer, doesn't change the ultimate burden, which is on the common motor carriers here. We're taxing the economic activity of the passenger. It's an indirect tax. it's not on the transportation itself, and the route doesn't signify. So it can be a tour that's inside of Nevada completely. And it's only taxing the connection. It could be a tour to Hollywood, California, but the passenger and the bus driver were connected in Nevada. That's the portion we're taxing, and that's seen by the 3%, which is a relatively lower rate of the total fare charge. So again, not on gross receipts. In the Supreme Court case, International Harvester Company versus Department of Treasury, we see that there's only preemption here when there's a tax on gross receipts, which there is not. And that's similarly codified in 14505. And again, here it's the TCT is highly distinguishable because we are not taxing transportation, we're taxing connections, which is a privilege of doing business in our state. As to the advisory opinion, I'll rest on the brief as to whether or not the advisory opinion was directed at Marquis, because it was not directed at Marquis. However, even looking to the language of the advisory opinion, we see that it's consistent. The TCT, it states that the TCT applies specifically to common motor carriers in this context, and that it's on the connection, and that's the physical place and time. So there is no discrepancy as to the language of the advisory opinion and how the connection tax was specifically imposed on Marquis here. Lastly, I would like to bring up to this commission that we may have an issue here of standing. So it has come to the department's attention that Marquis Motor Coach is now dissolved and no longer exists. When we look to NRS 372B 220, we see that's standing on a petition for judicial review. But if we connect by analogy here, the standing, it states that not any person other than who paid the tax can request a refund for the tax. And I pose the question, how can Marquis bring this or still have standing to bring a request for a refund when in fact it does not exist? It's no longer a person under NRS 0.039.
Okay, thank you. Questions from the commission?
Commissioner Lippman, I'd like to hear Taxpayers Council respond to the standing issue just raised by the AG's office, please.
Certainly, in response to the arguments, I will note the fact that the Department of Taxation has been aware since prior to the hearing that bankruptcy was, or that Marquis was entering into bankruptcy. We had extensive discussions with both Mr. Werbecki as well as with the department relative to the fact that, again, simply because of the fact that the company is filing for bankruptcy does not extinguish their ability to still proceed with the action. We also talked about the fact that the owners of Marquis were the taxpayers, and therefore they're still entitled as a taxpayer to the refund based on the fact that they were responsible for this. I'd also note the fact, Commissioner Lippman, that the issue as it began again in 2015 was ripe for discussion and determination then. Now, 7 years later, an entire industry has been negatively impacted because we can't get clarification as to what the connection is. So I'd submit that one, Marquis has standing based on the fact that they initiated the action prior to filing the bankruptcy and having the company. The owners were the ones that were responsible for the payment. It didn't make the payment, and therefore it survives. But more importantly is the fact that you have an entire industry, as I noted earlier, that has sought since 2015 clarification on this matter, specific to the preemption issue under 49 USC 14501 and 505, and then now as a result of the ambiguity that occurred during the testimony specific in the tax hearing.
Okay, thank you. Any other questions?
Mr. Chairman, Commissioner Byram.
Yes.
I have a question for Ms. Gabriel to start. In the final decision, page 836 of our 885 of the main document. In the final decision, it seems to be a split decision where it says that the claim for refund is denied, but the additional transportation tax that's overturned and it's set to 0. So what is the reason that was a split in the decision for the taxes going forward? What was the logic behind that?
Thank you, Commissioner Byram. As council stated, Marquis originally requested for a refund, and that then prompted an audit. And there was this, it was an audit of Gray Line and there was an audit of Marquis. And they were similarly related. And at the hearing level, the argument was that Gray Line and Marquis were one and the same. So Gray Line's records should be considered for purposes of auditing Marquis. And that's exactly how Marquis's deficiency came about. The ALJ disagreed with that argument and stated that Gray Line and Marquis are separate and could not be considered. And so the audit, which based a lot of the deficiency on the Gray Line records, was overturned. However, the ALJ found that Marquis is a common motor carrier of passengers and therefore subject to the transportation connection tax. And so the request for refund denial was upheld.
Okay, and then another question I have is on the legislative intent. So I think that originally they wanted to scoop up Uber and Lyft and that type of transportation and put it more in parity with a taxi service, shuttle services and taxi services. Can you explain to me then, is this something that was scooped in because it is also in a similar line and maybe wasn't really part of the intent, or was this part of the legislative intent to scoop in a common motor carrier?
I believe that it was to scoop in the common motor carrier, and that's seen by the plain language of the statute because the legislators specifically and explicitly set forth that the transportation connection tax in NRS 372B150 applies to common motor carriers of passengers, and there is a specific definition of common motor carrier of passengers. And so if the legislator wanted to carve out businesses like Marquis, then it would have explicitly done so through another defined term. However, it is clear the legislative intent here was to encompass all of these types of businesses that fall within this definition.
So then did their action precede the change in the US code that was mentioned by the taxpayer?
So, sorry, go ahead.
Or which came first? The preemption, the federal tax code or the state legislature's action?
The federal tax code existed when the TCT was enacted. And council can correct me if I'm wrong.
That is correct.
Thank you.
And if I could further expand on your question, Commissioner. So in 2015 was when the legislature authorized the operation of TNCs, otherwise referred to as Uber and Lyft. At probably towards the end of the session, I would say around May of 2015, Senator Settelmeyer Roberson requested that the 3% excise tax be imposed on the TNCs in order to have parity with the other transportation providers. And that's consistent with the legislative history. Specifically at the 11th hour, it was extended to include both common motor carriers as well as TNCs. But as you can see from the statutory scheme, it's riddled with issues that demonstrate a lack of understanding as to how commercial transportation works in Nevada. And specifically, what I mean by that is it states common motor carrier as a taxpayer, and then states taxi as a taxpayer. Well, a taxi is a common motor carrier in Nevada. And then it carves out airport transfer service. Why? We don't know. But from there, what happened was, and then again, the language that was utilized specifically for the TNCs makes sense because of the connection. That's what they do. It doesn't make sense when you apply it to transportation providers. What you're looking at now is one type of transportation provider, a charter bus, in which a charter bus has an identified group or an identified itinerary, and that whole group pays for the hourly service of that bus. So when you talk about boarding the bus and that being the taxable event and the time and place, if I could clarify, it doesn't apply to all other common motor carriers. We have fixed route operators in Nevada. So for instance, Big Bus Tours, they are a scenic tour operator, a charter bus operator, and a fixed route operator. So in their instance, a tour package could be sold to a group in Sydney, Australia. That group could then come to Las Vegas, and that hop on, hop off part of that tour package allows them to get on and off the bus at different times for a 24-hour period, a 48-hour period, or a 3-day period. So at what point when that passenger boards the bus does the tax hit? So that's the reason why you have one tax auditor saying, oh no, it's on the sale. Well, the sale of the transportation doesn't occur until the end in all instances. You may have a reservation, you may pay for that reservation up front, but all of the fees that are incurred during that trip don't come until the end. And so as Mr. Bell testified to, the taxable event is at the conclusion of the transportation, and the tax is on the transportation. That's codified in not only the legislative history in which one, the name of the bill was called Provisions Relating to the Taxation of Transportation, and two, in Senator Settlemeyer's testimony in front of Ways and Means, when he said, this is a tax on transportation. So that was initially why in 2015, we went to the Department of Taxation and said, we think that there's an error because you can't tax charter bus transportation under the Transportation Equity Act of the 21st century. And from there, the case dragged on. And then when we got to the hearing, we had the disparate interpretations. But I think it is one more point I could. The taxpayer issue is very important because Mr. Bell stipulated he is a taxpayer. He holds a license that says, I am a common motor carrier authorized to operate here in the state of Nevada. That's not the same with Grand Canyon Tours. They were not a certificated carrier. They were not required to hold a CPCN. They were never deemed to be a common motor carrier by the Nevada Transportation Authority. They owned vehicles for interstate operations, but they did not meet the standard for having to have a common motor carrier designation. Therein lies the flaw relative to the interpretation of taxpayer. If you subscribe to the ALJ's position and the Attorney General's, then why is RTC not a taxpayer? They hold themselves out to provide transportation to the public. They own vehicles, but yet they've never been taxed. We also have groups out there that are deemed to be exempt from the obligation to hold a CPCN, but yet they've been told, such as non-emergency medical transport providers, that they have to pay the tax. So I think that it's important to note the fact that there has been multiple inconsistent treatments relative to both the taxpayer and the taxable event. As it pertains to the AGO, that's not specific to the one or the advisory opinion. The one that's been referenced by both the ALJ and the AG's office is not the one that we questioned. The question comes from the one that Executive Director Contine issued in 2016 to LifeTrans, a contract carrier, saying, you're a contract carrier, you're exempt. Common motor carriers, you're not exempt. So if you take that line of reasoning that you look to the statutory scheme for clarification as to what constitutes a common motor carrier, then how did you get to Grand Canyon as being a common motor carrier? It's just this specific statutory scheme, as it applies to all of the transportation providers in Nevada, sans the TNCs, just doesn't work. And we've asked for clarification. We've gone to the legislature and asked for clarification. And it wasn't until the testimony presented at the hearing that there was any type of understanding as to how the department viewed this. And one says, again, it's when the ticket is sold, and the other says it's when the passenger boards the bus. So based on that, we would respectfully submit that one, the preemption does apply specific to charter bus operations, and two, based on the evidence adduced at the hearing, that void for vagueness as to the interpretation of the taxpayer and the taxable event.
Thank you, Ms. Gabriel. Part of my concern lies in the interstate, intrastate issue, where the companies are taking people over to the Grand Canyon in Arizona and back into Nevada. And we can't interfere with interstate commerce that way. And so it almost seems to me that the definition of the taxpayer is a kind of a tortured interpretation in order to not violate that. And I am confused, and I think that this is something that is more of a statutory construction issue that needs to be heard by the district court rather than at this level. Because for us to sort out what happened and the reach of that statute, it's a little bit beyond me. I don't know what the other commissioners think, but I just think this is a difficult case for us at our level to do. Even if it's just a refund case, but it's actually bigger than that. It impacts a lot of industry, a lot of people, individuals, and businesses. I think it needs to go up another level.
Thank you, Commissioner. It's true. This is not simple or easy. I think what's telling here is that it's an indirect tax. It's not. We have to keep in mind that for purposes of the connection tax and when the tax applies, it has nothing to do with the route or where the bus is going. It has to do with the connection itself. So we're looking at an indirect tax on the privilege of doing business in Nevada. However, if this commission is so inclined to say that this is not for them to consider, then like in Adventure Photo Tours, they can uphold the ALJ's decision so that gives the taxpayer the chance to then petition for judicial review if this commission were to say that to overturn the ALJ's decision, then you have foreclosed the department's ability to appeal, because this is where department's authority and ability ends, is in front of this commission.
Mr. Chairman, this is Commissioner Rotifer.
Go ahead. I'm sorry. I had muted myself. Go ahead.
I guess I just have a quick question for Ms. Rushton. And I sympathize with the position that she's putting forward, and I agree with where Commissioner Byram is at. This is obviously, we're in a conundrum regarding statutory construction, and it appears that this has received various interpretations. But Ms. Rushton, has there been an attempt to go back to the legislature for some clarification on this, or something that would clarify? Because I think we're treating various aspects of this industry differently. Is that, I mean, I've read through this material twice, and that's sort of my takeaway. And I don't want to get into a situation, especially with the revenue laws, where we have ambiguities. That doesn't serve anybody's purposes. It doesn't serve the state's purpose. It doesn't serve the taxpayer's purpose. So maybe you can provide some edification to me as to whether there's been any further attempt at the legislative level to try to clarify this.
Certainly, Commissioner Rotifer. So following the 2015 session, like I said earlier, there's only been one regulatory workshop on this, and it was specific as to the timing as to when the tax had to be paid. We did submit, the Livery Operators Association did submit request to Director Contine, specifically asking for technical bulletins or for a workshop to clarify this. When there was one draft bulletin that did not go out, but that was produced and we were privy to. But thereafter, recognizing that we had this issue In 2017, we specifically, through our lobbyist, Alfredo Alonso, brought a bill to seek to clarify. It never made it out of committee. And I think that there was also the concern that if you clarified it and there may be that, and how do I say it artfully, that financial stream that was being, that was provided by the common motor carriers could be in jeopardy. And so I was participating in that. I would say that my interpretation was that there was a concern that it would skew the financials and the amount of money that was being collected from the common motor carriers. So after the initial hearing, it never went any further. And then no, sir, after that, there's been no, we've simply proceeded through the administrative proceedings.
Okay, thank you.
Chairman Round,
Yes.
I have a question of Ms. Gabriel. It's regarding the federal preemption issue and 49 USCA sections 14501 and 14505. I think in an effort to keep this whole issue from running afoul of those statutes, I'm hearing and reading time after time after time that this is not a transportation tax, privilege of doing business in the state. And I'm hearing that it's called an excise tax, a privilege tax, a transfer tax. But unless I'm missing it, I'm not seeing any authority for this to be stated as a fact. Is there a legislative history that addresses what kind of a tax this is? Is there anything in statute? Is there anything in code? Any case law that's pertinent and relevant and persuasive here in Nevada?
Thank you, Commissioner Bursey. So as far as legislative intent, legislative history, there's no explicit language anywhere that says this is called this type of tax. We see from the language of the statute that the legislator didn't intend to directly tax transportation. And then we have, not in Nevada, but if we look to, and I will give you the specific case law, because Arizona and Hawaii also have taxes that are similar to the transportation connection tax, not exactly the same, but very similar. And we have that case law that says that they are indirect taxes. And I apologize, it does appear in my brief. I just want to find it for you specifically. Here we go. So we have California 1941 case, Camden Fire Insurance versus Johnson. Gross premium tax on insurance companies for privilege of doing business is called an indirect tax. And then you have the Arizona and the Hawaii cases. Why aren't I finding Arizona Department of Revenue versus Robinson's Hardware, discussing the Arizona transportation tax or their version of it, and then Real Hooker Sports Fishing versus State Department of Taxation. That's the Hawaii case that says it's similar to their TCT. It's a privilege of doing business in the state. But we don't have any case law specifically in Nevada.
I'd like to ask Ms. Rushton to address that out-of-state case law and how it may be the same or different as the case in Nevada.
In response to your question, Dr. Bursey, I note the fact that as of yesterday, the Arizona transaction privilege tax does not tax transportation at all in any way. So I would say that can't rely on that because it does not, that specific tax scheme doesn't tax transportation. I'd also note the fact that in pursuant to Assembly Bill 175 that promulgated the statutory scheme in 2015 and is quoted or cited by the AG in the Ways and Means testimony by Senator Settlemeyer, he specifically stated on May 15th at section 28 that the 3% passenger excise tax was based on the total fare charged by the transportation provider. That is a tax on transportation. If you construe their interpretation, when the person boards the bus, when the person gets into a cab, and if that's the taxable event, there's zero tax because they don't know what the transportation fare is going to be until the trip is completed. So there is no way to determine based on time and place that the taxable event is the boarding, because in most 98% of the instances, Dr. Bercy, you would not have the ability to calculate what that tax is based on.
Ms. Gabriel, there were a number of issues raised there. Do you have any response?
I would say that, again, as far as the senator's testimony, we see that he even calls it an excise tax. And he says it's on the total fare charge. He's not saying it's on the transportation. So we're not looking at gross receipts, which is everything encompassing what a business can charge for. We're looking at just the fare, and we're taking 3% of that, which accounts for, again, the connection, because it's at the end of the day, it's not a tax on transportation. It's a tax specifically on the connection, and that's seen by the rate of the tax, which is not a very large rate, not on the gross receipts. So I would say it's fairly apportioned to what Nevada is intending to tax.
Thank you both. I appreciate the answers.
Thank you, Commissioner.
All right, thank you. Any other questions? I would entertain a motion.
Mr. Chair, this is Commissioner Byram. Since we as a commission are required to start with the assumption that statutes passed by our legislature are valid, I am going to move to uphold the department and the administrative law judge's decision in Marquis Motor Coach.
Commissioner Evans seconds the motion.
Okay, I have a motion and a second. Further discussion?
Mr. Chairman.
Yes.
Commissioner Brown, I would just mention before we make the final vote that I concur with Commissioner Byram's comments that, the definition does seem a bit tortured in my opinion. And it does seem that, the taxpayer's been advised on occasion that this is a transportation tax. And then they've been advised that it's not a transportation tax, but a tax on the connection. And so I do concur with the ambiguity argument, but I will be voting in support to give the taxpayer an avenue to further their case at the district court level.
Thank you. That's my position also. Sometimes these just need to be sent up a little bit for further clarification and understanding. So all in favor, say aye.
Aye.
Aye. Opposed? Abstentions?
Commissioner Johnson abstain.
Motion carries. Thank you very much.
Thank you.
Let's take about a 5-minute break. It is 10:40 approximately, so about 10:45, 10:46. That okay with everybody? Good. Okay, we'll get started when everybody gets back. Okay, are we ready? Francine, are you with us? Hark. Okay, Tina, are you ready there?
We're missing
I
Yvonne.
think we're missing Yvonne. It'll be just one moment.
Okay.
Chairman Wren, off the record, how are you feeling?
At this very moment, kind of crappy. Sorry.
I'm sorry to hear that.
I am too. It's kind of,
Thank you
kind of
for
strange.
your
Kind of,
service.
it's really bizarre. It kind of goes in waves. I feel perfectly fine, and I mean, when we started, perfectly fine, and it's kind of like I just went downhill, and now I'll go back up. So
I'm sorry to hear that. It's nasty.
well, I appreciate it.
We are ready when you are, Chairman.
Okay, let's go back on the record. Thank you very much. Yvonne, call the next case, please.
Thank you, Mr. Chair. We're moving on to the second case in which we have a taxpayer's appeal of the administrative law judge's decision pursuant to NRS 360.245 and NAC 360.175. And this case is Whole Motorsports Incorporated. For the department, we have Senior Deputy Attorney General Andrea Nichols.
Good morning, Chairman and Commissioners. Senior Deputy Attorney General Andrea Nichols appearing on behalf of the Nevada Department of Taxation. It's NICHOLS. This is the taxpayer's appeal of an administrative law judge's decision that found that Whole is liable as a successor for the debts of business that it purchased. And this really is straightforward, I think, and really just involves one statute, NRS 360-525. And I just wanted to make sure that the commissioners had a copy of that.
Yeah, it was distributed.
Okay, is the Whole Motors representative present?
Yes, sir. Thank you, Mr. Chairman. For the record, John Sandy IV, here today on behalf of Whole Motorsports, and that's SANDE.
Okay, go ahead.
All right. Well, thank you for the opportunity to be here before all of you today. To begin, I want to start with the backdrop and kind of the foundation that we're going to be building upon here and starting, and that's really the Taxpayers' Bill of Rights. So the Taxpayers' Bill of Rights essentially requires the department and this commission to treat taxpayers fairly, with common sense, and importantly, to have statutes imposing taxes and regulations construed in favor of the taxpayer if those statutes or regulations are of doubtful validity or effect. So what does this mean? Well, to me, it means if there's an ambiguity, or in other words, if the department offers you an interpretation of these statutes, and I offer you an equally reasonable interpretation of these statutes, my interpretation wins. The tie goes to the taxpayer. Our interpretation I'll submit to you is reasonable because it's consistent with the statutes and the regulations and also with Supreme Court precedents. So I'd like to begin by sharing a little bit of a story. In this story, there's 5 characters. 4 of these characters are good guys. They're trying to do their best. They care about Nevada, and they're all innocent parties that were deceived by the one bad character in this story, and that's Gato-Malo. The good guys are Harley Motor Credit, Department of Taxation, the customers and employees of Carson City Harley-Davidson, and Whole Motorsports. Now, you probably know where I'm going with this. Gato-Malo operated the Harley-Davidson dealership franchise in Carson City, Nevada. In late 2015, it was discovered that Gato-Malo had been doing some pretty bad things. Most notably, Gato-Malo had breached its franchise and financing agreements with Harley and began selling motorcycles without paying off the financing associated with those motorcycles. In other words, Gato-Malo was stealing from Harley. Meanwhile, Gato-Malo harmed the department because Gato-Malo neglected to report those same sales to the department and remit the sales tax associated with those sales. In other words, Gato-Malo was stealing from the department. Now, these actions jeopardized its business and the jobs and employees and the jobs of the employees, and it would also leave the customers without a place to purchase or service their motorcycles anywhere in northern Nevada. When Harley learned of this theft, it took quick action to secure all of its collateral and mitigate its losses. You see, Harley was a secured creditor with a perfected security interest in substantially all of Gato-Malo's assets. Harley sued Gato-Malo in Carson City District Court and obtained an injunction of all of Gato-Malo's assets and prevented it from doing business in any fashion. The business was shut down for a number of weeks. Had an intervening party not presented itself, there's little doubt that Harley would have enforced its priority and foreclosed on all the inventory, leaving the department without any recourse except against Gato-Malo, resulting in all the employees losing their jobs and their customers unable to purchase new motorcycles in northern Nevada and having to travel to Sacramento area, Las Vegas to service their motorcycles. This was a particularly dire situation for everyone involved. Now, fortunately, an intervening party did present itself, Whole Motorsports. Whole offered to purchase the Harley-Davidson franchise, provided that Harley would approve Whole as a franchisee and that Harley would release its security interest so that Whole could purchase that inventory from Harley. Fortunately, Harley did approve Whole as a franchisee, and it agreed that if it was paid for all of its damages, it would lift its injunction and release the security interest so that Whole could acquire the inventory from Harley. Essentially, the crisis was averted. Harley was made whole, employees kept their jobs, customers had a dealership to conveniently purchase and service their motorcycles, and the department had a business that would continue to operate and generate sales tax. There was only one problem: Gato-Malo's tax deficiency. Now, at the time of the negotiation, Whole could have requested a tax clearance letter from the department. This request would require the department to state whether there was a deficiency that was owed by Gato-Malo. And if there was a deficiency, NRS 360-525, the statute you have in front of you, requires Whole to withhold the purchase price paid to Gato-Malo until Gato-Malo had cleared that deficiency. However, because Whole didn't request this letter prior to closing, the withholding did not occur. Subsequent to the sale, Hull did request a tax clearance letter. And after approximately 5 years of prolonged proceedings, Gato Mal's deficiency was finalized and the department notified that it was seeking the entire deficiency from Hull as the successor in interest. The department's efforts is the basis of this proceeding. So here we are. The primary question in front of us that we need to resolve is how much money was Hull required to withhold from the sale of the Harley-Davidson dealership to account for Gato Mal's deficiency? So to answer this, I'd like for us to go back in 2015, just prior to closing. And let's ask ourselves, if Hull had requested a tax clearance letter, and that tax clearance letter indicated that Gato Mal's deficiency was north of $2 million, how much of that was Hull capable of withholding? If you ask the department, they're going to say all of it. The sales price, as you can see from the flow of funds memorandum, was approximately $2.4 million, and that was more than the tax deficiency. However, let's play this out in our mind. Hull withholds the $2 million. Harley learns that there's less than a couple $100,000 to satisfy their over $2.1 million in damages. Harley would rather continue its litigation and foreclose on the business assets. No deal. Harley gets nothing, or departments gets nothing. The employees are laid off. Customers have no dealership and no business left, no future business to produce future tax revenues. So in other words, everybody loses. I want to repeat this one more time. Everybody loses. Harley forecloses, department gets nothing, employees are out of a job, there's no service center. Now, our answer is that Hull was required to withhold the amounts that were actually paid to Gato Malo or to satisfy Gato Malo's unsecured debts. If we look at the flow of funds memorandum, I believe it's Exhibit H in your binder. It essentially is the most relevant document to all of this. It shows where the monies were all paid to. And from that, you can see that in the flow of funds memorandum, 2.175 went to Harley Davidson. Now, Harley, these amounts to Harley were not capable of being withheld because Harley Davidson was had a secured priority interest to the state, and it was superior to the departments. So Hull was right to pay that amount to Harley. However, Hull should have withheld the $108,000 or so that was paid to Gato Malo and the $200,000 that was paid to Mark Ray because that was used to satisfy Gato Malo's unsecured debts. In this situation, Harley's made whole, the department gets $308,000 of tax deficiency, the employees keep their job, and customers have a convenient and reliable dealership to purchase and service their motorcycles. Moreover, the department has a sales tax producing business, which, this is important, has paid over $4.7 million in taxes and sales taxes since taking over from Gato Malo. So where does our interpretation differ from the Department of Taxation's? I submit that the Department of Taxation's interpretation is draconian and it doesn't review the entire statutory framework and the Nevada Supreme Court precedents. If you only look at 360, 525 in a vacuum, you can arrive at the department's conclusion. It does say that a purchaser should withhold the amount due. However, that's not the end of our analysis. We must look to the regulations as well. NAC 360, 430, subpart 2, and I'm quoting, says, the requirement to withhold may not arise in connection with other transfers of a business, such as assignments for the benefit of creditors, foreclosures of mortgages, and sales by a trustee in bankruptcy. Now, I asked you to pay close attention to the words such as before that list. This list is illustrative of types of transactions. It's not an exhaustive list of transactions. So what is this list illustrating? What is assignments for the benefits of creditors, foreclosures of mortgages, and sales of trustee in bankruptcy? What do they all have in common? Well, all these transactions involve a breach of some sort of agreement with a secured party or individual with a security interest or right to the property or business being transferred. This is exactly the situation we have here. Harley is a secured creditor enforcing its rights to the collateral of the business. Of the purchase price, Harley was owed over $2.1 million. Gato Malo stole this money from Harley. It isn't entitled to take that money again to satisfy its own tax deficiency, and the regulations recognize this. Moreover, Nevada Supreme Court precedents recognizes this. Lloyd's Bank versus the state is the only Nevada Supreme Court case that interprets a successor interest case like this one. There are slight factual differences in that was an unemployment tax case, not a sales tax. And the secured party in that case was also the purchaser. But other than that, the cases were factually similar to this case. The purchaser neglected to request a clearance letter, and the state was seeking to recover the deficiency from the purchaser. Now, the important conclusion that the Lloyd Bank makes, and this is quoted from the case, is where no fund is available from which the purchaser can withhold the amount of the debt, no obligation to withhold arises. I would submit to you that's eerily similar to the regulation that this commission has adopted in 360-430 sub 2 and eliminating certain types of transactions that would trigger a requirement to withhold. The main difference is that the unemployment division didn't benefit from the same regulations that this commission has adopted. So it was important for the Supreme Court to make note of that where no fund is available from which the purchaser can withhold the amount of the debt, no obligation to withhold arises. So to sum this up, if Hull would have requested a tax clearance letter, if a sale were to go through, the only amount Hull could have withheld at that time was the purchase price that was paid to Guatemala in the amount of $308,076. Otherwise, Harley would have proceeded with its foreclosure and everyone loses. The statutes, the regulations, Supreme Court precedents, and common sense are consistent and favor our interpretation of the statutory framework. The Taxpayers' Bill of Rights is clear that even if you believe the department has a reasonable interpretation of the statute, you must look more favorably on our interpretation. And finally, a fundamental tenet of statutory construction is that courts must interpret statutes to prevent absurd results. The department's interpretation leads to less money to the state, employees losing their jobs, customers without a means to service their property. I would submit to you that this is indeed an absurd result. Our interpretation is consistent with the law. It makes sense. It arrives at the best outcome for everyone. And the department is still free to pursue Guatemala of the entire tax deficiency, as well as penalties and interest. And so I'd like to finish on just addressing the penalties and interest portion of this, because it's the one place that I can say it feels like it's black letter law that penalties and interest incurred after the sale are not includable within the deficiency. And so that the 108 really should stand as the amount of that Hull would ultimately be liable for. So in order to impose penalties and interest, the department requires statutory authorization from the legislature. And that authorization is found in NRS 360-417. That 417 lists all of the chapters and all the sections where penalties and interest incur, so such as 372 with sales tax, property tax, commerce tax, etc. Notably absent from that list is NRS 360-525. It's not there. Now, someone might look and say, well, maybe the legislature forgot that. Well, I can point to NRS 360-787, which is in that same chapter, and authorizes penalties and interest for fees imposed by statute. Again, NRS 360-525 is not, the legislature does not authorize the inclusion of penalties and interest. Moreover, this can be found in the statute and the regulation that this commission has adopted. The statute says that a successor can be liable for the amount required to be withheld. That amount required to be withheld is determined at the time of the sale. Therefore, any additional penalties and interest that a taxpayer accrues subsequent to that time cannot be held to be owed by the successor. It's just not included. Moreover, in the regulations, NAC 360-430 states the liability of the successor extends to all taxes, interest, and penalties, quote unquote, incurred during the operation of the business by the predecessor. Again, if there's penalties and interest that were accrued by the taxpayer and it was known at the time of the sale, that amount is properly included. But after the operation of the business, the regulation, the statute, and again, law does not allow for the imposition of penalties and interest. So I would ask for you today to deny the ALJ's hearing. My client has agreed that it is liable to pay $108,076.55. And we would look favorably, or we would appreciate your favorable consideration on that. And I will sit for questions and also the department's comments.
Mr. Chairman, it's Commissioner Brown.
Go ahead.
I apologize. I should have mentioned this earlier. AT&T employed Mr. Sandy's father's son as a contract lobbyist approximately a decade ago. I've not spoken to Mr. Sandy about this case. I don't have any reason to believe I couldn't be impartial, but I would leave that up to Ms. Bordelove if she thinks that there's an issue that I should recuse myself.
Ms. Bordelove?
Rosalie Bordelove for the record. No, at this time I wouldn't be advising you to recuse, but thank you for the disclosure.
Thank you.
Okay, thank you. Any questions from the commission for Mr. Sandy? Okay.
Mr. Chairman, I would like to ask a couple questions.
Okay.
When Guatemala was being audited, which was after the transaction or before the transaction?
Correct, after the
Mr.
transaction.
Tapia?
Yes, ma'am.
He appeared before us.
Yes, ma'am.
At that time. He was unable to get any records, any documents. He claimed that he was blocked out of having any documents in order to defend himself, in order to defend the audit. And the state, when it has to do an audit, is required to use the best information available at the time. And so the audit results, what they are is somewhat the fault of the successor in this case, it seems. I mean, are you aware of that situation, or what was the reason that he was locked out of having any access to documents?
So he was not locked out. I don't know if this testimony was presented at the hearing. It might very well have been, but he was never locked out. Yes, the Harley had received an injunction and the locks were changed, but he had complete access to all of his records should he choose to have requested them and come to Whole Motorsports and obtain those. They were not withholding those records from them. They never would have withheld those records from him. And that was Mr. Tapia's recollection of the events, but I have it on good authority that is not the case.
Okay, because I remember him appearing twice, I believe. The first time we said, why don't you go back and try again to get those records? And he came back and hadn't been able to. So, but I remember, that happening, and I was kind of curious about how that was going to come out. And so in your brief, you're talking about the decision not coming back within 60 days. But how do you interpret the 90-day provision in 36525?
Yeah, so if I recall correctly, and the way that it had gone was that the department initially had scheduled an audit for Mr. Tapia in early December of 2015. That audit, when they was put on, when Mr. Tapia said that he was going to sell or indicated that he was going to sell and there was going to be a change of ownership, rather than proceeding with the audit so that the new owners would have a better understanding of what the tax deficiency might be, instead of doing that, the Department of Taxation canceled the audit. And there was no determination at the time. I think Mr. Tapia had a finalized amount of approximately $300,000 in deficient taxes. It wasn't determined until well after into May of 2016 that it was actually closer to the $2 million. And so that's when that amount first became known. It was our position in that 90 days that because the department had already started an audit, because they were aware of a potential sale, that should require the department to take a little bit more care and proceed with the audit so that the new buyer, whoever that might be, would have an understanding of what a deficiency was. Instead, they canceled the audit and waited until May to resume, or at least to prepare the deficiency. And so our position in the briefing was that the department shouldn't benefit from its action there, that had already started an audit. The time frame for which they should have completed that audit would have begun in December rather than in, I want to say, late February when the letter was actually requested.
So the transaction was closed before you requested a clearance letter?
That's correct.
That is correct.
That is correct.
Okay. And that's all the questions I had for now.
Mr. Chairman, I have one additional question.
Go ahead.
So, Mr. Sandy, in your testimony, you mentioned $108,000, which was paid to Gato Malo or Mr. Tapia. And then you also mentioned $308,000, which includes the $200,000 paid to Mark Ray. So is your position that the $308 is what is due to?
That is my position. So on the regulations under 360-430 subpart 2, where it has the list of transactions that do not require a successor to withhold that money, those are all involving secured parties and secured transactions, which in this case, Harley definitely was. Mark Ray was not a secured party. It was an unsecured loan. That loan, Whole Motorsports did pay $200,000 for that unsecured loan. And so based on our reading of the statutes and the regulations, that would be an amount that was properly withheld or should have been withheld. So if you add that $108 that was actually paid to Tapia plus the amount that went to pay Tapia's unsecured debt, that's where we arrive at the $308,000 number.
Thank you.
Any other questions of Mr. Sandy? Okay, Ms. Nichols, go ahead.
Oh, thank you very much. Mr. Sandy started with the Taxpayers Bill of Rights, and it does require the department to construe things in favor of the taxpayer when a statute is of doubtful validity or effect. And we're just jumping to that conclusion, but there's absolutely nothing in the record that would show that NRS 36525 is in any way of doubtful validity or effect. As was pointed out, I believe in an earlier matter before the commission today, we assume that legislative enactments are valid and constitutional. Mr. Sandy next pointed to the various players. There was Gato Malo, and I think it's very important to point out that Gato Malo is the seller. And Gato Malo here was the taxpayer. A lot of his arguments, Whole is trying to step into the shoes of Gato Malo, but they're not the seller, they're the buyer. Whole Motorsports is the buyer. And then he also brings up the Harley Davidson or Harley Credit Corporation. They're a creditor. They're not a party in any way to the transaction that's at issue here. And again, in the Lloyd's Bank case, that involved a creditor who was taking back a piece of property that it had loaned money on. Again, in the Lloyd's Bank case, to analogize, Harley would have been the creditor, not Whole. And that's why the Lloyd's Bank case doesn't apply. And then I'd also point out, as the ALJ did in that case, I mean, Mr. Sandy takes one small quote, but you have to say, a secured creditor who acquires title to collateral by credit bidding at a foreclosure sale is not a purchaser. Here, Whole Motorsports was not the secured creditor. Harley was. Whole Motorsports is the buyer, and that's why the Lloyd's Bank case does not apply. Whole Motorsports, in the normal course, a purchaser will request a tax clearance letter from the department before the transaction closes. Whole Motorsports didn't do that. They did request it after the transaction closed. And then the department generally has 60 days to do the tax clearance letter unless it gets documents. And so what happened is they got some documents from Gato Malo, so that extended the period to 90 days. And they did produce the tax clearance certificate within the 90 days as allowed by statute. And then I think it's very important to point out that Whole structured the deal the way they structured the deal. They could have, not only could they have requested a tax clearance letter before the deal closed, but they could have structured it in such a way to get the taxes paid. But what they did is and I think that is, it's part of Exhibit 16, that all of the department's exhibits A through N were put in the record and on appeal under Exhibit 16. And entered into this asset purchase agreement. Right in there under tax matters is a reference to NRS 360-525.
Who are you looking at?
It's of the I'm sorry, I just went right past it. In the asset purchase agreement, it is page 11. In my documents, it's numbered as tax 35, just because that's where we put it in. It's part of Exhibit 16. All of the department's exhibits are Exhibit 16 to the record on appeal. The asset purchase agreement, I don't
Ms.
know
Nichols?
what number it is.
I'm sorry, just, I'm
Yeah, I
sorry.
don't know what number it is in the
It's-
commission's packet.
It's 190.
So obviously they relied on the seller's representation that all the taxes were paid. But rather than relying on the seller's representation, they could have just gotten a tax clearance letter from the department. And then there's a I guess it would be called the flow of funds memorandum. And you can see the total amount to be paid at closing via wire transfer. And again, this is part of Exhibit 16. It was the department's Exhibit I.
Page 221.
Thank you, Chairman. So they actually, looks like they transferred $2,175,498.40, transferred that amount at closing. And then if you look at the next page, they also assumed $2,474,000 in liabilities. And if you look at NRS 360-525, if a business or stock of goods was purchased for money, withhold from the purchase price the amount due, or if the business or stock of goods was not purchased for money, withhold a sufficient portion of the assets of the business or stock of goods, which if sold were to equal the amount due. So I would argue that they certainly could have withheld the amount due from the purchase price, or, they could have, let's just say Whole could have structured the agreement the way that they wanted to. And a lot of Mr. Sandy's argument involved what could have happened if Harley foreclosed, but that's not what we're looking at. We can't live in the world of hypotheticals, coulda, shoulda, woulda. The coulda, shoulda, woulda here is coulda, shoulda, woulda gotten a tax clearance letter before closing. And you can't base your determination on something that could have happened if they had structured the transaction differently. I think I made my point, and I'd be happy to answer any questions.
Okay, thank you. Any questions from the commission?
Commissioner Wren, this is Commissioner Brown.
Yes.
I do remember the Gatto Malo case when we heard it before, and I don't want to get into a debate over the 60 days versus 90 days of the clearance letter, but my recollection was the additional documents they provided were not responsive and did not make any changes to the audit that was being considered. I remember the department looking at those documents and just saying, this is not helpful, and we're not going to make any changes as a result of that. I don't think we need to get into a debate over it, but I think it's should be noted that just because somebody hands you another document doesn't reset the clock or give you more time. I mean, it wasn't something that we used or made a change or any determination on based on what they provided.
That's subsequent to, so what you're looking at it is subsequent to the audit. So when they initiated the audit, Gatto Malo brought them some documents. Because Gatto Malo brought them documents, it extended the clock from 60 days to 90 days, and that's just pursuant to regulation in NAC. I think it's 36432, but I'd have to look again.
Thank you, Mr. Chairman.
And I'd also point you, as well to the administrative law judge's findings of fact and conclusions of law, because I think she did a really good analysis.
Okay, any other questions?
Mr. Chairman?
Yes.
Commissioner Byram, just a quick question for Ms. Nichols. Does there remain joint and several liability?
As far as I know, yes. I can't comment on another taxpayer, but I can tell you that typically in these types of things, the department would go after both parties.
Okay.
Any other questions?
I have a quick question, and I'm not sure whether it should go to Mr. Sandy or Ms. Nichols, but I think I'm going to send it to Mr. Sandy. It's my understanding from my reading and reading the flow of funds memorandum that $2,175,498 was transferred to the Harley Credit Corporation for it to release the assets that it held as collateral on a debt owed to it by Gallo Molly. The taxpayer argued that this was a secured debt that had a higher priority lien than the lien that the department could assert, and therefore that it would not be available to withhold from. Is that the case, Mr. Sandy?
Yes, ma'am. You did a better job than I did.
And what would be the corresponding argument from the department, Ms. Nichols?
I would just look at the plain language of NRS 36525. And if it's they're just required to withhold from the purchase price the amount due, or if the business is not purchased for money, withhold a sufficient portion of the assets of the business. And in terms of priority of creditors, that really has nothing to do with this case, because Harley Davidson is the creditor, and Harley Davidson is not, doesn't have any sort of liability or non-liability in this action. I mean, really, the action is just between the department and the purchaser. And as I pointed out before, the whole argument is sort of based on Whole trying to step into the shoes of the creditor, and it's not the Whole is not the creditor, Whole is the purchaser.
Thank you.
If I may respond, though, I think, and again, it goes back to my opening comments, is that if we're just going to look at the statute, then I agree you could arrive at that determination. However, this commission has adopted 36430, and this commission's adoption of that in subparagraph 2 says there are certain types of transactions that if money goes to satisfy that, it's not included in the amount that is required to be withheld. And I would submit to you that foreclosures of mortgages, assignments to the rights of creditors, sales and bankruptcy, like all of those involve a secured party. They are very similar to what we have right here. Harley Davidson was required to sign off on this deal, or there would be no deal. And so in my opinion, what we are going to this commission and asking is, how do you want this interpretation of the statute to be interpreted in the state? Do you want it to be interpreted in a way that if there's a secured creditor and they will never sign off on a deal like this? Or do you want to allow a secured creditor to get paid what's owed to them so that a transaction similar to the one that Whole engaged in is able to be effectuated and move forward? Yes, we agreed we are the purchaser. We're not the secured creditor. We're not denying that we could have requested a tax clearance letter, and that would have resulted in the $2 million, us knowing about it at the beginning. The question is, if we knew there was a $2 million tax deficiency, if Whole knew there was a $2 million tax deficiency, and they had to withhold a certain amount, how much should they have withheld? If your determination is they should have withheld $2 million, Harley Davidson never signs off on this. That dealership closes, employees lose their jobs, plain and simple. However, if the right answer was Hull should have withheld the $308,000 that went to Gatomalo or to satisfy Gatomalo's unsecured debts, then Harley Davidson would sign off on this deal. They would get their $2.1 million that they were owed, that they had an injunction to protect their rights to that $2.1 million. That would have happened. The deal would have gone through because Gatomalo couldn't have done it. This money is going to satisfy his liabilities to the department. This is how I believe that this in statutory framework. And I believe that the Lloyds Bank case says the exact same thing. I agree, Lloyds Bank, there's two conclusions. And in fact, the court actually says we're making two conclusions based on the arguments. One is that Lloyds Bank was not a purchaser because it was the secured creditor. To that, we agree with the department. But what we don't agree with the department, and what the department doesn't address in any of their briefings or otherwise, is the second conclusion that the Lloyds Bank case made. And that was the part that I quoted to you that said where no fund is available from which the purchaser can withhold the amount of the debt, no obligation to withhold arises. So it's saying essentially what NAC 430 subpart 2, which this commission adopted, is that money is not available to satisfy Gatomalo's debt because there's a secured party with priority over the state to that money. And so had we, it's not what it coulda, shoulda. We're saying had we requested that tax pulse letter, we would have known there was a $2 million plus liability. The question is, where do we go from there? Do we shut down the business, no deal, or do we withhold the $308,000 so the department can have that money, and then the department can go pursue Gatomalo for the rest?
Okay, any other questions?
Commissioner Wren, this is Commissioner Johnson. I have a question.
Go ahead, sir.
One of the things I've been looking at as far as all of these various agreements and things is what exactly was the amount of the secured debt? Because Mr. Sandy, would you agree that Harley Davidson was only secured up to the amount of the value of the collateral?
Yes, sir, I would agree with that.
Okay, so then my concern is that was approximately, from looking at the sales contract, looking at the, what do we call this, the flow of funds, there was only a portion of that was secured, probably in the amount of 2.1 million, 2.4 million, something of that nature. So there was substantial unsecured consideration paid. Even based upon the sales contract, there was 1.8 million that was allocated to goodwill. So that certainly wasn't a secured debt or a secured obligation. So my point is that I do think, just like the money that went to Mark Ray's trust account, there was additional money that went to Harley Davidson that was for unsecured debt. So that's my concern and my point.
Yeah, if I may address that. So all of the value of the damages that was determined by the court in Carson City that Harley Davidson was owed was the $2.175 million associated. And that is why they received that amount. Now, the values that you receive below in that are, from what I understand, accountants doing their job. At the very bottom there, you have the total purchase price of $2.483575. So that is the universe in which we are operating under. Of that 2.4, Harley Davidson was damaged to 2.1, and without them receiving that money, they were unwilling to assign over the rights to the inventory of the business or to or Harley Davidson Motor Corp, which is a different, but they're affiliated, or for Harley Davidson to accept Hull as a franchisee of them. So they had all the decks in this card. They held everything. I believe that they were properly secured up to 2.1 because that's the value of damages they had. If they were to go sell it sell all the inventory and see how much it would receive. I don't know if they would have gotten a 2.1, but they were entitled to that as damages that Guatemala had harmed them. And at the end of the day, again, we are, Guatemala absolutely was the antagonist in this story. We are amongst ourselves, all innocent parties, trying to figure out how to allocate the limited dollars that were available to be allocated. It is our position that if this went to bankruptcy, the courts would look and say, who was the secured creditor? Harley Davidson was the secured creditor. They get paid first. If there's money left over, then it goes to the state. If there's money left over that, then everybody else can be made whole. This is no different than what's before this commission today, is how do we allocate where this money should have gone? It's our contention that it should have gone according to priority, and that, we are here falling on the sword today saying that, we should have withheld $308,000.
To the extent the 2.1 was secured debt, I agree that that would take priority and go to Harley Davidson. But the actual sales price, when you add up the sales agreement, does identify the sales price as including amounts assumed. And if you add that up, the actual sales price was $4,956,000 some odd dollars. And so there was substantial money that went to Harley Davidson that was unsecured.
So if I may, you raise a wonderful point. I'd like to direct you to the very next page of this, to both pages. So pursuant to the agreement, at the very top, it says the purchase price is $2.483 million. And then if you go to the first paragraph on the next page, it says seller and buyer acknowledge and agree that, one, to the extent applicable or necessary, this flow of funds shall amend the agreement pursuant to it and in accordance with section 11G thereof, and two, the figures above constitute and are, as of this date hereof, the final uncontested amounts that compromise the purchase price. So the parties had agreed that $2.4 million was in fact the purchase price. The inventory that Hull subsequently purchased, it received a brand new loan at different terms, different interest rates. That was not an assumption of liabilities. That was a financing deal that Hull had independent with Harley. As the flow of funds memorandum makes abundantly clear, in my opinion, the actual purchase price in this transaction was $2.483575.
I disagree because based upon the contract, it included the amounts assumed. I understand that accountants after the fact want to allocate assets for tax purposes and things of that nature. But based on the actual sales contract, I think the purchase price was the full amount plus those amounts assumed. So that's my problem.
And if I may, just to be clear, so this flow of funds memorandum was attached to the purchase agreement. And as I just read, it's my interpretation of it that the parties had intended every section referring to purchase price in that contract to be amended by this flow of funds. And that's why I feel comfortable today before you to say that this is, as far as purchase price is considered, this flow of funds memorandum is our universe.
Well, if you look at the paragraph 3 of that agreement, it breaks out the purchase price components. And the first item, section 4.ai, it says no cash assumed by buyer. So that was the amount that was assumed by the buyer, which was $2,474,000 some odd dollars, which then under the agreement became part of the purchase price.
And if that were in fact the case, if I were to agree that $4 million was, if we look back to the inquiry, which is what we started in NRS 36525 requires us to do, is what is the amount capable of being withheld? There was no amount of money, as it was no cash, that could have been withheld in that instance. Hull had no rights to the property. It couldn't have held assets back to protect the state. There was no ability for Hull to do anything other than withhold $308,000.
Well, I understand there would have been a problem with the transaction if the taxes that were owed had been taken into consideration, but the but they weren't. And I understand that Harley Davidson wouldn't agree to it, but Harley Davidson is not a party to the purchase and sale agreement. So I just think there's a problem there with the amount. When you're talking about the Lloyd's case, that's based on the amount of the secured debt. And that was the full amount that was the consideration. And so therefore, yeah, that makes sense. That couldn't be withheld. But in this case, I think it's entirely different because we have a portion that's secured and then an additional portion of the purchase price, which was unsecured.
Okay, any other questions? Okay, I would entertain a motion.
Mr. Chairman, this is Commissioner Byram.
Yes.
I'm going to move to uphold the administrative law judge's decision for the case of Hull Motorsports.
Commissioner Lippman seconds the motion to uphold the ALJ's decision in Hull Motorsports, Inc.
Okay, we have a motion and a second. Any further discussion? All in favor, say aye.
Aye.
Aye. Opposed?
Nay.
You may want to take roll call.
Okay. Anyone take roll call for me, please? Or do you want me to do it?
Yes, I got it.
Okay.
Sure. Commissioner Lippman?
I'm in favor of upholding the ALJ's decision in Hull Motorsports.
Commissioner Bursey?
Aye.
Commissioner Rotifer?
Aye.
Commissioner Brown?
No.
Commissioner Johnson?
Aye.
And Commissioner Byram?
Aye.
Chairman Wren,
Aye. Okay, motion passes. Thank you very much. Yvonne, next case, please.
Yes, thank you, Mr. Chair. Our next taxpayer appeal of the administrative law judge's decision pursuant to NRS 360.245 and NAC 360.175 is the case involving Nori Auto Sales. In this matter for the department, we have Deputy Attorney General Michael Weeks. And I'm not sure where a taxpayer is present today.
I do not see a taxpayer present.
Okay, taxpayers not present. Is there appeal? Michael Weeks, do you have a comment?
Morning to members of the commission. Chairman Wren, Mike Vietz, I have the privilege of representing the department in this matter. We have, I think, fairly thoroughly explained our position with regards to this appeal in our filing. I'm more than happy to answer questions with regard to any of the details that may be contained therein. And I'll just open it up to any questions the commissioners might have.
Great, thank you. Any questions?
Chairman Wren, this is Commissioner Brown.
Yes.
I would just state for the record that it's a bit troubling that the records that they produced regarding drive-away permits were all notarized after the fact of the sale. I'm not a notary, but I know there are laws governing notaries that say if you're swearing that someone's appearing before you, that they actually are appearing before you. So I'm in favor of denying the appeal.
Commissioner Lippman, did you expect the taxpayer to appear today?
To Commissioner Lippman's question, there was notice given to the address on record by U.S. Mail Before the representative, Mr. Bruce Frazee, former attorney, current CPA, he was given the notice in person prior to sending notice to myself that he no longer represents the taxpayer. We are, and I try to make sure I include this in the summary of facts, is to let you guys, let the commission know where we stand with that, just because it was something of a peculiar case in terms of we received an email saying that the taxpayer no longer exists from the representative, and the representative said that I no longer represent them, but when we requested confirmation of that, he said he couldn't give it. That was on Friday, November 18th, and I included that in our summary. So I had anticipated that someone would be showing up today, either the taxpayer or new representative. But for the record, I have not received any indication that there is a new representative. I thought perhaps that one might show up today and appear at the time necessary. But at present, we've given notice by mail and hand delivery to the former representative prior to him withdrawing. Does that go to answer your question?
Yes, thank you.
Any other questions? I'd entertain a motion, please.
Commissioner Brown,
Go ahead, Commissioner Brown.
I apologize, Commissioner Lippman. I would make a motion to uphold the denial of the appeal for Nori Auto Sales.
Commissioner Lippman, second your motion, Commissioner Brown.
Thank you. We have a motion and a second for the discussion. Seeing none, all in favor say aye.
Aye.
Opposed? Motion carries unanimously. Thank you very much. Yvonne?
Yes, thank you, Mr. Chair. Our last taxpayer appeal of the administrative law judge's decision pursuant to NRS 360.245 and NAC 360.175 is a case involving Rebel Kitchen Incorporated. Again, on behalf of the department, we have Deputy Attorney General Michael Beets, and I again do not know if the taxpayer is present.
He is. He's just making his way to the table now.
Terrific, thank you.
Okay, thank you, sir. If you could identify yourself and spell your name, please.
Allen, last name Allen. I'm a Chief Financial Officer for Rebel Kitchen.
Okay, this is your appeal, so go ahead.
Gonna
He's going to be here a while.
I'm ready. As I outlined in the brief, there are two questions. Were the food items that Rebel Kitchen sold subject to tax? And two, is the department treating us fairly, uniformly, consistently, and with common sense as required under NRS 360.291 and the Nevada Constitution? We maintain the answer to both of those questions is no. We sold these types of items in our store along with other food items that were taxable, and those taxes were collected and remitted during the course of the audit. In every material respect, we complied with the law. We complied with the fact that we had a separate account for the collection of the tax, and it was remitted on a timely basis. These items, we contend, are not subject to tax under Sparks Nuggets versus the department, that they are food items. The department has countered that by saying they're for immediate consumption and they're prepared food. We vigorously argue with that, and the administrative law judge's conclusion was that they are not heated, there's not 2 or more ingredients mixed, and they're prepackaged. We agree with all that. What we don't agree with is on page 7 line 11 of her ruling that said that they are prepared, they're prepared snacks because we provided napkins and utensils. And therefore they were subject to tax based on the fact that we provide utensils and napkins in our store. We did not provide napkins and utensils for these items. Common sense indicates it does not require a napkin to drink a Diet Pepsi. It does not require a knife and fork to eat a Snicker bar. It's not reasonable that those are conclusions, and the conclusion of the administrative law judge in that case is not reasonable. Further, we only provided napkins for people that were buying meals or pizzas in our store. Now, if a customer requested a napkin for any reason, a customer could come off the street and say, do you have a napkin? We would provide that as just a normal course of business. But it just, like I've stated, it doesn't require napkins to use these or to consume these items. Second point is, on the immediate consumption item, the administrative law judge used Collins as her basis. Collins was canned beverages sold out of a vending machine. That is not what we did. This has a twist off top. You can drink part of this. You can keep, I purchased this on Saturday. This is not for immediate consumption. I haven't consumed it yet. Furthermore, if I twist off the top, drink a little bit of it, put it top back on, I can put it in my refrigerator and 4 days later consume the rest of it. So that does not meet the immediate consumption exemption under Sparks Nugget. The second point that I wanted to make, and the second question, is that we're not being treated fairly. All I want to be is treated fairly with the other retailers. In preparation for the hearing before the administrative law judge, I submitted evidence of 10 retailers, large retailers, that sell these identical items under identical conditions to what we did, and they did not charge tax. The argument that was brought forth in the hearing was that just because they get away with it doesn't mean we should be able to get away with it. We're not trying to get away with it. We reasonably interpreted that these were food items and not subject to tax, to sales tax. At the hearing and in the administrative law judge's review, she stated that the department was going to investigate our claims and take appropriate action. Over the course of the last 48 hours, I revisited 9 of the identical 10 retailers where I purchased these items. I have those receipts, the originals and copies, if anyone wants to examine them. And none of those 9 retailers at this point are charging sales tax on any of these items identical to what we sell under identical conditions. So the department has had 16 months to enforce this regulation on other retailers. And I'm talking about, you got the list in front of you. We're talking about Walmart, Target, Vons, Smith's, Albertsons, Maverick. Those are just the ones we have evidence on. I've visited 35 other ones that I also have evidence that they're not charging sales tax under identical items and identical conditions. And that's where we conclude that the department is acting arbitrarily and capriciously, that one set of rules are enforced for every other retailer in the state of Nevada, and one set of rules is enforced for Rebel Kitchen. And essentially, those are the 2 arguments. It's very possible that the department wants district court to clarify whether these specific items are taxable under the statute or not, or under Sparks or not. And that's well, maybe where we're heading on this. And if that's the case, if this goes to district court and the court rules that these are taxable items, I have provided the state with millions of dollars of tax revenue of very low hanging fruit, because all they have to do is audit every retailer in the state, start with Walmart and start collecting millions of dollars. Otherwise, if that's the conclusion of the department and that's what they want to do at the district court level, then we're going to have to go do that. Otherwise, anybody have any questions for me?
Any questions for Mr. Allen?
Not yet.
Okay, let's hear from the state.
And good morning again, Mike Viets for the department. And I think that there is and are some of the most colorful visual aids I've seen to date on the table in front of me. It's the first one. I'm not surprised that some of the earlier meetings didn't bring in a bus. I suppose that'd be a lot harder to get into the room. That said, going to the record in this case, because I know that's what this hearing is supposed to concern, is the ALJ decision based on the record. You'll see that in our filing, we did address the 2 points brought up by the taxpayer in their appeal. To those first sets of points regarding, I guess, what could be fairly characterized as what are argued to be common sense arguments. And a lot of the briefing seems to concern itself with the common sense of the necessity of using a napkin to consume a prepackaged beverage or prepackaged snack. What the ALJ's decision was based on, though, was 360B, 460, the McKesson case, and then the Collins case. In those cases, they look at the indicia of whether or not something is sold and packaged so that it could be consumed or prepared food for immediate consumption. In this case, on Bates Exhibit 0200, and that's the State Department's Exhibit 200, there's a photo taken of the purchase of items from the taxpayer, which includes a bottled drink and I think it was a pizza, or no, Caesar salad, and forks and napkins. So there was indicia in this case of the napkins being sold or associated with the sale of the bottled drinks. The ALJ did review the record in this case, and unfortunately it was not addressed at hearing. It was about 59 minutes long, and at about 43 minutes into that record, there was discussion of straws. The napkins didn't really come up. That said, what has been submitted and was reviewed by the ALJ, and I believe we've reiterated in our briefing, is that napkins were in fact provided with these sales based on the evidence that was presented at the hearing. To that point, the 360B section that the ALJ relied on looks for the indicia of prepared food intended for immediate consumption. Having seen that and having found that there was evidence of that in the record, it was not an arbitrary or capricious or in any other way in violation of any law related to the application of taxes in this case, to find that this was prepared food for immediate consumption. Just as the illustration today could say that there is a unscrewed cap that could be screwed on again and placed in the fridge, so too could be arguments made based on the McKesson and Collins case, indicating that these are sizes that are intended for immediate consumption. And contrasting it with the gallon of water that was considered in one case and the chilled cans in another case, the concentration was not on the resealability of the package in which it was produced and offered to the customer. It was more concentration on whether or not the amount of that sale was something that was available or amenable to immediate consumption. In this case, we have, standing in front of us, examples of things that could be consumed by any average person very quickly and is amenable to immediate consumption. All of them required nothing further than me to unwrap the package and consume it. And just as with the chilled case, or the McKesson case, I think it was, regarding the chilling of food or the chilling of cans, there were photos also submitted in Bates 200 to 224 that show how the food was packaged and prepared, or rather, forgive me, how the food presented to customers, that is, in fridges in an air-conditioned environment. So going to those logical arguments, I think that there's a second type of logic which can be considered, and that's the logical application of the statute. The statute says that where there are indicia of materials or of napkins, forks, plates of that nature, that they are going to be considered indicia of prepared food for immediate consumption. On that basis, the ALJ reviewed the record of evidence presented, the testimony of the three witnesses on behalf of the department, and I don't recall that Mr. Allen testified. I don't know if he asked questions and he gave information on his questions, but I don't recall him testifying. But based on the three testifying witnesses, the evidence supports the ALJ's decision with regard to the first question. With regard to the latter questions related to, I think it was the second sets of questions presented in Mr. forgive me, Mr. Allen's presentation of evidence. The fairness, uniformity, and common sense. Within the taxpayer's appeal, there's a argument or assertion that there's only one logical conclusion for finding that he doesn't see tax assessed on the purchases he's made, and perhaps on the ones standing in front of us today on the table. But going back to the record, in that record, there were explanations given by the taxpayer, or rather by the department's witnesses, explaining that it could have been that tax was in fact assessed. It was just posted that it was accepted. It could have been that there was an error in collecting that tax, or that they do not actually list on the receipt the taxes that they're assessing and remitting to the department, or sorry, yeah, that they're assessing and remitting to the department. Those explanations offer alternative conclusions that are equally logical and also quite possible. Now, as the commissioners know, as Commissioner Rents know, we are limited in the department from discussing the taxpayers. However, all of these solutions and logical conclusions that I have offered do not require that consideration. They're just examples of alternative logical conclusions that could explain why there isn't tax listed on its receipts and why it is not dispositive evidence of the question it presents. To that point of fairness and equality in the treatment, Smith, the department has in fact done it. And I think that any review of the record would elaborate on the points I've made today and illustrate that the department has been fair and followed the rules it must follow in conducting this audit.
All right, thank you. Questions of the state?
Mr. Chairman, this is Commissioner Byram.
Yes, ma'am.
This reminds me of the pizza cases. Do you remember the pizza cases? Probably people who've been here a while.
Yeah.
It used to be if you went to get a pizza at a pizza place, it was taxable because it was considered fast food. And at a grocery store, you can buy a frozen pizza or even a regular pizza in a deli that was ready to go, and it's not taxable because it's food. And then Papa Murphy's was created. Papa Murphy's take and bake pizza was identical to grocery store take and bake pizza, not frozen, ready to be taken home and cooked. And so the state had to readdress how that worked because there has to be sort of a fair playing field for entities such as Papa Murphy's or other pizza places that take and bake. So I think my more comments and question is that and a lot of times when you are buying food at a convenience store or a restaurant where there is seating, they ask you, is this for here or to go before they push the button? And those computerized registers are set up. If it's for here, taxable. If it's to go, not taxable. You're taking it away, we can assume that it's not being immediately consumed. And that was a way to split that out, right? But my question, I guess my question in my mind is more to the taxpayer is if you're selling someone a pizza or a salad and you're selling it for a price that includes a drink and chips, and that price isn't distinguished on the receipt, then whatever that price is would be taxable because that's a meal. You could throw in utensils and that's a meal that you're selling. But one-off sales of soda and chips shouldn't be different in that store versus the next store over. If it's just one-off sale, and whether that requires you to ring it up as a to-go or a stay and eat in to get that distinction, but this taxpayer shouldn't be treated differently than the next store over that happens to be selling the exact things and considering them food.
In answer to your question, in bundling, we bundled and sold at a certain price, pizzas with sodas, and that entire bundle was taxed. The department confirmed we were taxing properly on the bundle.
Correct.
If it was, so yeah, you're absolutely correct in that assumption, and we followed that part of the law.
It sounds to me like the taxpayer is correct and it was being done correctly, but it's hard to convince me otherwise. I mean, you can see those items, you don't pay tax on those, wherever you get them. I think as long as they're taxing the bundled items, when the bundled items are the things that are that are going to include a napkin and a fork and a straw or whatever. And when those chips and sodas are bundled as part of a package deal, that's taxable. And when they're just one-off sales, they're not taxable. That's the way I would have considered it, to be in parity with other businesses and to use common sense. That's my 2 cents. I don't really have any questions.
Okay, any questions? Any more common sense?
Well, Mr. Chairman, this is Commissioner Roder. I would tend to agree with that. I don't want to be in a situation where we're treating this taxpayer differently. I mean, if I would have got, a bottle of water or a bag of chips at Walmart, I'm not paying tax on it. If I get a bottle of water and a bag of chips at his business and walk out the door and get in the car, I'm paying the tax on it. That, to me, that disparity, I don't think is acceptable.
So just out of curiosity, at your point of sale, does your registers differentiate consuming it there or taking it out?
It does. It does not tax differently based on that.
Okay. Okay.
Mr. Chairman, I don't want to take too much time, but I just want to make a motion to overturn the administrative law judge's decision and uphold Rebel Kitchen's position.
Commissioner Bursey seconds.
Okay, there is a motion and a second. Any further discussion? Other than the fact that it's pronounced Nevada, not Nevada. You knew I was going to say something. Okay, all in favor, say aye.
I do have a question. So if beverages are in a refrigerator and if someone drives in to pick it up and take it, I mean, to me, purchasing it from a single serve beverage from a refrigerator is different than going into a Walmart and buying a 6-pack of Coke. So
Yes.
does the law distinguish between those two? I mean, buying the 6-pack of Coke that's warm is not for immediate consumption.
May I respond to that?
Yes, please.
I think I heard from the commissioners a no, and I can go to that. I'd ask them for the authority on that because I know that there are cases that go to the quantity of something being offered, and that's part of what we cited in our brief today. The other part of this is that there's been discussion of the two situations, but we don't actually have much information on what has been called identical. I know that there have been stated opinions already from 2 of the commission members about their position, but going to what you have here, there is consideration in Nevada Supreme Court case law, which we cited, that goes to the size of something that's going to be consumed to determine whether or not it's prepared food for immediate consumption. In that case, it was consideration of the sale of water. And the sale of water in that case involved increments of about a gallon, which is not immediately amenable to consumption for the average person. And common sense does come into play here because it does look at the size of what's being purchased. And here today, we have in front of us a couple of bottles of soda, Doritos, and 2 candy bars, or what I would usually call lunch. So it's something that can be immediately consumed and something that can be eaten in a size that is available and amenable to immediate consumption. So going to your question, yes, size is considered by the Supreme Court, and that's what we've submitted in our brief is consideration of that. It doesn't sound like that's convincing 2 of the members, but I would ask that it be noted that we have argued that the size, according to the Supreme Court, has been considered on appropriation. On the record. I'm sorry, was there a question?
Commissioner Lippman, did that answer your question?
Yes, because I can recall prior cases before us about donuts and whether the donut was served with, the individual donut was served with a napkin or not. So versus buying a 12-pack of donuts.
Through their register.
May I clarify one thing? McKesson was a vending machine, as was Collins. They were not refrigerated, point of sale, impulse type items like you would see at the checkout at Walmart or Smith's or Albertsons. And that's how they were displayed and presented in our store.
I'm sorry, I got that all wrong.
Okay. All right, thank you very much. We do have a motion and a second. All in favor of the motion, say aye.
Aye.
Opposed?
Nay.
I believe I only heard one nay. Motion carries. Thank you very much.
Thank you, Commissioners. The motion is.
How's everybody doing? You want to take a break or should we just
Finish.
Power through.
let's power through? Okay, that works for me. Yvonne?
Yeah, Mr. Chair, if we may, we do have Deputy Attorney General Amber Scott down in our Las Vegas office now. If we could return to agenda item 5A, the department's request for approval of a motion to dismiss taxpayer appeal and affirm the decision of the ALJ in the Sabrina Di Filippo. My apologies for mispronouncing that. Again, if we could have Ms. Scott come up to the table.
That'd be fine.
Or
And we decided the taxpayer wasn't present, is that correct?
Tina's checking for the taxpayer.
Okay, thank you.
I don't see her on Zoom, and I don't believe she's present.
Tina, I do see a hand up by Mr. Childers on Zoom.
Yes, I did see that. Mr. Childers, you are unmuted.
Can you hear me?
Yes.
My comment is too late at this point. The NTC already rendered a decision on Rebel Kitchen. So it's muted at this point.
Okay. Okay, if the taxpayer is not present, does the Ms. Scott have any comments?
Yes, good afternoon. My name is Amber Scott, representing the Department of Taxation. This is a straightforward situation regarding an appeal of the ALJ's decision regarding holding Ms. Sabrina De Filippo personally liable for the debt of Punching Juicery. Ms. De Filippo submitted a appeal request in August of 2021. Since then, she's had numerous occasions and numerous opportunities to submit a brief in compliance with NRS 360-175. That has not been done. There have been numerous letters sent out. There has been no response whatsoever in any way, and those letters have been sent certified mail and via email as well to multiple addresses. So at this time, other than her being unresponsive, I don't see that there would be a need for the appeal to move forward. And I'm just requesting that it's dismissed at this time.
All right, thank you very much. Any questions from the commission?
Commissioner Brown would move to dismiss the appeal.
Commissioner Lippman seconds the motion to dismiss the appeal of Sabrina De Filippo.
Thank you. I have a motion and a second. Further discussion? Seeing none, all in favor say aye.
Aye.
Opposed? Motion carries. Thank you very much, Ms. Scott.
Thank you.
Yvonne.
Very good. Thank you, Mr. Chair. We will move on to item 5D. Pursuant to NRS 360.265, this is consideration for approval of the removal of the names of certain debtors, including the amount of tax, penalty, and interest from the records of the department for debts exceeding 5 years due to collection being impossible or impractical. And under this agenda item, Mr. Chair, we have Department Staff Charlene Bernardo.
Okay, Mr. Bernardo, go ahead.
Good afternoon, Mr. Chairman, members of the commission. For the record, I am Charlene Bernardo, BERNARDO, Tax Program Supervisor 2 with the department. The matter before this body is a removal of uncollectible tax, penalty, and interest from the department's active collection rules. The last time this body acted on this issue was December 2021, in which this commission removed 613 accounts totaling $7,903,280 from active collections. This is an administrative move designed to make way for accounts that have a higher priority and collection life left in them. The department will still collect monies on these accounts through liens and other passive collection methods, but does not actively collect on these accounts. Pursuant to NRS 36265, the department is requesting removal of 770 accounts totaling $9,038,220.28 in uncollectible tax, penalty, and interest. All of these accounts are at least 5 years old, and deemed uncollectible. Either the taxpayer was bankrupt, now out of bankruptcy, all claims submitted, and or the account is either impractical or impossible to collect for various reasons. I'm happy to answer any questions the commission may have.
Excuse me. Thank you very much. Any questions from the commission?
Mr. Chairman, this is Commissioner Byram. I don't have any questions. I just want to tell you thank you for sorting it in dollar amount order.
You're welcome.
Thank you.
You're welcome.
It's a lot easier to read. It's very, very tiny, but it's helpful.
Thank you.
Feel free to make a motion.
I will move to approve the current names of certain debtors from the Department of Taxation Records.
Commissioner Rhoda for seconds.
Thank you. We have a motion and a second. Further discussion? Seeing none, all in favor say aye.
Aye.
Opposed? Motion carries unanimously. Thank you very much. Okay, Yvonne?
Okay, Mr. Chair, if we're okay to keep going, we'll move on to section 6 of the agenda, which is our regulations for adoption.
Okay.
Okay, the first regulation is consideration of the adoption of temporary regulation LCB file number T004-22. This is a regulation relating to taxation concerning cannabis excise tax and providing other matters related thereto. I'll give a brief history and then we could take public comment, Mr. Chair.
Okay, thank you.
This agenda item provides the commission with an opportunity to conduct a public hearing and adopt this temporary regulation. As required by NRS 233B.061, this meeting has been noticed in accordance with the Nevada Open Meeting Law, which requires 30-day notice for this adoption, and the department has conducted the requisite workshops necessary for adoption by the commission. If adopted, this regulation will be a temporary regulation as a result of its timing. Pursuant to NRS 233B.063 subsection 3, an agency may adopt a temporary regulation between August 1st of an even-numbered year and July 1st of a succeeding odd-numbered year without following the procedure required by this section and NRS 233B.064, but any such regulation expires by limitation on November 1st of the odd-numbered year. However, a substantively identical permanent regulation may be subsequently adopted. Pursuant to NRS 233B.070 subsection 2, an agency that has adopted a temporary regulation may not file the temporary regulation with the Secretary of State until 35 days after the date on which the temporary regulation was adopted by the agency. A temporary regulation then becomes effective when the agency files it properly with the Secretary of State and the Legislative Council. Accordingly, if the commission adopts this today, the earliest that the temporary regulation will become effective is January 9th, 2023. Moreover, this regulation will expire on November 1st, 2023, unless the commission follows the procedures to consider and adopt it as a permanent regulation before that date. Barring any relevant changes to the law regarding consumption lounges and the taxability thereon, it will be the department's intent to bring this forward as a permanent regulation before that deadline. By way of history, the Nevada legislature enacted AB 341 during the 2021 legislative session to provide for the licensure and regulation of cannabis consumption lounges. Existing law imposed an excise tax on each retail sale of cannabis or cannabis products by an adult use cannabis retail store. Section 34 of the bill applied this excise tax to retail sales of cannabis and cannabis products by a cannabis consumption lounge. In response to the statutory authority from AB 341, the Nevada Cannabis Compliance Board adopted its regulations governing the licensure and activity of cannabis consumption lounges. Notably, as recently as last month, the CCB has selected its prospective licensees, and CCB will now be undertaking a suitability investigation for these prospective license holders to obtain their conditional license. Accordingly, these lounges are not currently operating, but will be soon. With the operation of consumption lounges immediately pending, the department presents this proposed temporary regulation to the commission for adoption to address the applicability of the excise tax on the retail sales of cannabis by the cannabis consumption lounges and to provide for how the excise tax will be collected and reported to the department, what records will need to be retained by the cannabis establishments, and how a claim for refund can be filed for an overpayment of excise tax on this cannabis. Sections 3 through 29 of the temporary regulation provide definitions applicable to the regulations of cannabis lounges consistent with the definitions set forth in NRS 678A and 372A. Of note, there are two types of cannabis consumption lounges: retail lounges and independent lounges. Retail lounges are attached or immediately adjacent to an adult use cannabis retail store, and independent lounges are not. Independent lounges will enter into contracts with adult use cannabis retail stores to sell to the independent lounge. After the definitions on the substantive side, Section 30 of the regulation provides that cannabis products obtained by a retail cannabis consumption lounge from an adult use cannabis retail store are not subject to the excise tax on cannabis, and such products should not be included in the taxable measure on the return pursuant to NAC 372A.160 until the lounge sells the product to a consumer. Section 31 states that a cannabis product purchased by an independent cannabis consumption lounge from a cannabis retail store to be resold are not subject to the excise tax until the product is sold by the lounge to the consumer. Sales by the retail store to an independent lounge must be reported by the retail store to the department, and these sales are also exempt from the taxable measure on the return. Cannabis products sold are subject to sales tax when sold at a retail store, retail lounge, or an independent consumption lounge. These cannabis establishments must register with the department and submit sales tax returns and payments. And Section 32 requires all cannabis consumption lounges to keep records, receipts, and invoices necessary to determine the amount of liability of the taxpayer on the excise tax on cannabis. This section also sets forth the requirements for the contracts between the independent consumption lounges and the adult use cannabis retail stores for the purchase of their cannabis and cannabis products. Section 34 then amends NAC 372A.160 regarding the imposition on taxpayers for excise taxes on cannabis or cannabis products to pay the applicable excise tax based on either the retail or wholesale sales to other cannabis establishments or consumers. Taxpayers are required to maintain supporting documentation verifying the payment of such excise taxes, and if required, to produce financial statements to the department. And as a final, somewhat unrelated matter to consumption lounges in this temporary regulation, the department also proposes an amendment to NRS 372A.155, which governs the calculation of cannabis for the determination of fair market value. Specifically, this regulation defines pre-rolls to be calculated as they are now reported in the seed to sale tracking system, currently known as metric, based on the total weight of cannabis contained in the pre-roll and sold by a cultivator. Upon approval of this definition, this calculation will be updated on the department's return to better inform taxpayers how to properly report tax on pre-rolls. And with that, Mr. Chair, would be the opportunity to take any public comment on the regulation and then turn it over to the commission to conduct its public hearing and consider whether to adopt.
All right, thank you very much. Do we have any public comment?
We do have public comment up here.
Thank you. If you would identify yourself and spell your name, sir.
Will do. Hello, Will Adler, WILLADLER, representing the Sierra Cannabis Coalition. The Sierra Cannabis Coalition would like to first thank the Department of Taxation for holding the workshops on November 17th and the follow-up subsequent meetings we had, as it was a very short timeline to try and get these changes done. Upon the changes produced by the department, the Sierra Cannabis Coalition is in full support of these regulations and the intent that they will have for lounges and other tax implications. Thank you very much.
Thank you, sir. Any other comment in Reno?
No further comment in Reno, Mr. Chair.
Any public comment in Las Vegas? I don't see anybody coming forward. Any questions from the commission?
Yes, Chairman Wren, this is Commissioner Bursey.
Yes, go ahead.
The draft that I have of this temporary regulation, it is the latest one December the 5th.
It should be. I might check with Tina really quickly to make sure.
I just want to make sure that I have the latest draft. My question is that I have read a letter from Paul Larson of Black and Wadhams, who is asking the commission to look into procedures for claims for overpayments, credits, and refunds that were reflected in Section 35. And I don't have a Section 35 on my draft, and I'm just wondering what's happened with that.
Thank you, Commissioner Bursey. This is Yvonne Navarez-Goodson for the record. Yes, you do have the current version of the regulation. So I also was in receipt of Mr. Larson's letter, and it was a department error that we included Section 35 in one of the drafts that he reviewed. So in response to his comment, we removed Section 35. And that's no longer in the draft you have before you for consideration today. So the overpayments for refunds is already addressed in NRS 360. And so that accommodates that particular issue.
Thank you.
Mr. Chairman, this is Commissioner Byram. I had personally received some comments about consumption lounges from people that are involved in the industry, saying that there's nothing that requires a taxi service or any sort of ride service outside of it, that they were concerned. This is a very small community that doesn't have a taxi service and does not have Uber or Lyft or any other way. And that if people are leaving there impaired, that it may cause some concern, and that maybe transportation of some sort ought to be required. But that's just a comment for down the road, something to think about. And we might have to see what happens before that is going to be seriously considered, but just something that I've heard.
Okay, and I appreciate that comment. First thing that comes to my mind is we'd have to do that for every bar in the state of Nevada too.
Good idea.
I'm not saying it's a bad idea at all.
Chairman
Okay.
Wren,
Yes.
I have a question just about the procedure. So what is the interaction with the Cannabis Compliance Board? How do we work with them on these proposed regs?
Thank you, Commissioner Lippman. Again, Yvonne Navarez-Goodson for the record. Really, the department looked at the taxability question for the purposes of these regulations. So the department doesn't have any authority over the licensing of these consumption lounges. That authority was given to the Cannabis Compliance Board. And so the authority that was provided to the Department of Taxation through the bill was really about the excise tax that would be imposed. And so that was the purpose of this regulation. We did work with CCB, however, regarding timing. We were concerned that the taxability regulations wouldn't be enacted by the time that the lounges were open and active. So we have worked with CCB to ensure that that the regulations would ideally be adopted in time for those consumption lounges to open.
So we do work hand in glove somewhat with them to make sure that we're not taking a position that's not practicable.
Again, for the record, Yvonne Navarez-Goodson, in this context, I would say that was the case, yes.
Thank you.
All right, thank you very much. Any other questions? If not, I'd entertain a motion.
Mr. Chairman, this is Commissioner Byram. I will move to approve the adoption of temporary regulations, LCB file number T004-22 relating to cannabis.
Commissioner Bursey seconds.
Okay, and I guess I do have one more quick question. If we approve it, it's a pretty time short frame, and then it'll be brought to us again to be approved. Are you anticipating any other workshops between now and then, or are you just looking forward to just expecting this to go forward?
Again, Mr. Chair, Yvonne Navarez-Goodson for the record. The process required in NRS 233B to bring forward a proposed permanent regulation would in fact require the commission or the department to hold another workshop before presenting that to the commission for a public hearing for adoption. So it would go through essentially the same process for a permanent regulation. So there would be one more workshop.
And so if there was further concerns or things that need to be addressed, we could do that at the workshop. And those changes, if any, would be presented in the permanent regulation.
Yes, and as a matter of fact, the permanent regulation process would also require the department to present this language to the Legislative Council Bureau for their proper vetting. So it may not be the exact same language you see in the temporary version versus the proposed permanent after the Legislative Council Bureau has its opportunity to vet that language, and then that would come again before the commission for approval.
Okay, great. We have a motion and a second for the discussion. Seeing none, all in favor say aye.
Aye.
Aye. Opposed? Motion carries. Thank you very much, Yvonne. The next one.
Okay. All right. So our next regulation, Part B, is consideration for the adoption of permanent regulation LCB file number R068-21. This is a regulation relating to taxation, establishing provisions governing the delivery of alcohol sold by retail liquor stores to consumers, requiring brew pubs to maintain certain records related to the manufacture of malt beverages for sale to a wholesaler located outside of the state, and providing other matters properly related thereto. So once again, Mr. Chair, this agenda item provides the commission with an opportunity to conduct a public hearing and adopt this permanent regulation. As required by NRS 233B.061, this meeting has been noticed in accordance with the Nevada Open Meeting Law, which required a 30-day notice period, and the department has conducted the requisite workshop necessary for adoption by the commission. If adopted, this regulation will be presented to the Nevada Legislative Commission for review and approval. Upon approval by the Legislative Commission, it will be filed with the Secretary of State, at which time it would become effective as a matter of law. It is my understanding that there is possibly going to be one more Legislative Commission meeting before the end of the year, sometime in December. So if the commission were to adopt this at this meeting, it would be our hope to get that over to the Legislative Commission here early this week. By way of history, the Nevada Legislature enacted Senate Bill 307 during the 2021 legislative session, which provided in part for the authorization of retail liquor stores or delivery support services acting on behalf of a retail liquor store to deliver liquor in its original package to a consumer in connection with a retail sale under certain circumstances. The bill required the Department of Taxation to adopt regulations governing such deliveries. Specifically, Section 4.7 of SB 307 addressed such liquor deliveries and also specified that these deliveries are exempt from certain provisions of law governing transport of liquor, including requirements for certain state licenses. Pursuant to Section 4.7 of the bill, the regulations of the department must include without limitation the following. First, a requirement for the retail liquor store or delivery support service to obtain proof via signature or other verification that the person accepting the delivery is at least 21 years of age. Second, that any liquor deliveries originate from the premises of the retail liquor store during its operating hours. Third, the area in which deliveries must be made, taking into account the relevant local jurisdictions and marketing areas of wholesaler of liquors to be delivered. And finally, provisions that encourage local governments to adopt ordinances in coordination with the department's regulations. As a result of feedback at the department workshops and industry feedback on the proposed regulation, the commission has a revised proposed draft from the Legislative Counsel Bureau, along with various department amendments to this revised proposed draft for your adoption. Section 2 of the regulation outlines the manner in which a retail liquor store or delivery support service acting on behalf of a retail liquor store may accept orders for and deliver such liquor to a consumer. Such liquor must be sold by the retail liquor store, purchased during posted business hours of the store, and may not be for resale. They must also originate from the retail liquor store that is making the sale. The liquor store must satisfy all local licensing requirements to engage in such business where the liquor store is located and where the delivery occurs, and must purchase the liquor from a wholesaler in compliance with the marketing area of the wholesaler. A delivery support service acting on behalf of a retail liquor store must enter into a written agreement with the liquor store to deliver liquor to consumers on behalf of that store. Section 3 of the regulation requires the retail liquor store or delivery support service to ensure that any person making the delivery is 21 years of age or older, maintains a log of such deliveries, makes deliveries only to the address specified in the order to a person who is 21 years of age or older, and not deliver such liquor to a person who shows signs of intoxication. Section 4 of the regulation confirms that actions taken by a delivery support service on behalf of a retail liquor store, including soliciting or receiving an order, is not deemed to be the sale of liquor as defined in NRS 369.100. Section 5 outlines the requirements for the delivery log, and Section 6 requires the retail liquor store to maintain records for the deliveries to be produced upon reasonable notice to the department or its agents. Section 7 of the regulation imposes various monetary penalties for violations of these regulations. And finally, Section 8 of the regulation confirms that local government entities shall adopt regulations regulating liquor delivery consistent with these regulations and which are otherwise authorized under Nevada law. So the intent of our regulations is not to interfere with the local government's abilities to adopt regulations that they are authorized to do so under Nevada law. And as a final matter, outside the context of liquor delivery by retail liquor stores, existing law previously authorized owners of brew pubs in Nevada to manufacture 40,000 barrels of malt beverages. However, SB 307 authorizes owners of brew pubs to manufacture and sell an additional 20,000 barrels of malt beverage to a wholesaler located outside of Nevada, subject to auditing by the Nevada Department of Taxation. Section 9 of this regulation addresses this new requirement governing brew pubs, which manufacture and sell malt beverages to wholesalers outside of Nevada, and requires the brew pub to maintain and produce necessary records to the department confirming the beverages manufactured outside of the state for wholesalers outside of the state, including the kind and quantity shipped, the name of the wholesaler, and the physical location to which it is shipped. Mr. Chair, with that summary, I'll turn the matter over to the commission to hold public comment and to otherwise conduct its public hearing and consider adoption of this regulation.
Okay, thank you very much. Do we have public comment in Reno?
It doesn't appear that we do.
Is there any public comment in Las Vegas? I see no one coming to the table. Do we have any comments or questions from the commission?
Mr. Chairman, it's Commissioner Brown.
Yes, sir.
I would just ask the department, Clark County submitted a letter with several questions, and I was wondering if the department had responded to those questions.
Yes, thank you, Commissioner Brown. Yvonne Navarez-Goodson, for the record. Yes, the department was also in receipt of that letter, and we did address that particular request. You'll note that that is in the penalty section of the regulation. In the draft that you have, the department has sought to delete subsection 2 of section 7 to indicate that the local governments may impose their own penalties for violations of their own ordinances, and we are limiting our penalties to violations of our regulations.
Thank you.
Mr. Chairman, I have a question.
Yes, ma'am.
On section 3, paragraph 3, that's page 8 of 10 of our PDF document. It says that a retail store or a delivery support service acting on behalf of a retail liquor store shall not make a delivery of liquor to a person who appears to show signs of intoxication. And I wonder why, if someone is at their home and orders something to be delivered, that if they're going to be buying it and consuming it anyway, that keeps them from being out there on the road, going out to pursue it. So for public policy reasons, would that then be better to have someone deliver it then if that was going to be the case? But also, how would you administer that? Where you've got a delivery person has to do have to have some knowledge of how to identify whether someone's intoxicated, or if they have signs of intoxication, or if they have another handicap that may appear to make them look intoxicated. I don't understand that provision and how that would work in reality. Are they liable if they misdiagnose someone? They're just a delivery person. I know bartenders have to know signs and be aware of them and stuff, but a delivery person is going to be the one that we're relying on to sell or not sell.
Okay, yeah, I was concerned with that language also. Yvonne, do you have a response to that?
Thank you, Mr. Chair. Yvonne Navarez-Goodson for the record. I'm afraid I don't have a response to that. I'm not sure the history of that particular section. Commissioner Bursey is correct. There are existing laws in place that require certain sellers of liquor to refute sales to persons who are intoxicated. That may be where that derived from, but the department did not, to my knowledge, receive any comment, public or otherwise, on that particular section. So I don't know
if you were to edit the language to say, shall not make delivery of liquor to a person who, based on their judgment or based on a reasonable judgment, appears to show signs, there's something that where there's some enough wiggle room that they're not going to be held responsible if there's an accident or they couldn't get the liquor, so then they decided to drive to get it. You know what I mean?
Yeah.
So to the best of their judgment.
Yeah, Mike, you think about this. In reality, you're going to have a 21-year-old delivery person delivering this stuff. More likely than not, right? Or a very young person, I should say. So what gives them, I agree with you, what gives them the ability to judge impairment? And I guess I think I kind of agree with your concern. What is their liability, given the statute? Or regulation, I should say.
Mr. Chair, this is Yvonne Navarez-Goodson for the record. I'm not sure if it would address your question or your concern. The only point I would make is under the regulations, the delivery support service entities are supposed to or are required to have an agreement with the retail liquor stores. So my assumption is that there would be, a requirement on the entity in the agreement to have these sorts of, it would be an employee of the delivery support service that would likely be trained and potentially could be the liability of the delivery support service organization. For example, if we were talking about like a DoorDash or an Uber Eats, I'm just kind of thinking out loud, it might be along those lines, but there would be a written agreement required between the delivery support service entity and the retail liquor store as to how these deliveries would take place.
Is this going to be temporary, Greg?
This is a permanent regulation, yes.
So similar to, it's Commissioner Lippman for the record. So similar to the Cannabis Compliance Board, is there a liquor compliance board that perhaps can take on these non-tax bigger issues?
Again, Yvonne Navarez-Goodson for the record. I'm not aware of a liquor compliance board, but I do understand that the local governments do have a lot of authority over the licensing. So as does the Department of Tax have some authority over the licensing of some of these entities, but the local government, cities and counties have authority over the licensing of these retail liquor stores. So I don't know if that answers your question. They would have been noticed for purposes of this regulation. We didn't receive, I mean, for what it's worth to your judgment and your feedback, that we did not receive any note of concern from any retail liquor stores or the industry that is representing the delivery support services that this provision was problematic.
So I guess in my mind, I think the underlying question here is rereading it. A retail liquor store or a delivery support service acting on behalf of retail liquor store shall not make a delivery or liquor to a person who appears to show signs of intoxication. What are the consequences if they do? That's the question. None. Would you agree or disagree? I mean, it's, you know, it's very vague and open-ended.
It implies there could be.
If I may, Mr. Chair, Yvonne Navarez-Goodson for the record, I guess I would refer you back to Section 7, which is the penalty provisions, which indicates that the department may impose penalties on a retail liquor store that violates any of the provisions of this regulation. So I presume then that the department would have authority if it learned that delivery support service entities acting on behalf of a retail liquor store were violating that provision. The department would have recourse against the retail liquor store under Section 7, potentially.
Okay. Which kind of makes sense because it's their job to make sure that they're training the people to adhere to the law. Okay. All right, any other comments, questions, concerns?
I mean, it is, Mr. Chairman, this is Commissioner Rodford. I mean, it is a subjective standard. I mean, you're asking the delivery person to simply determine whether or not that person is showing signs. That's how that person views them. I mean, I've known people that are functioning alcoholics that seem as normal as everybody else, but they may not pass a sobriety test at any point in time. So I don't know. I mean, I don't see the value in the provision if you're asking a person to just simply say, in their opinion, they appeared not to be intoxicated. So, and frankly, if I was the young person, I'm the person that's 21, 22 years old, I'm making a delivery. Am I really going to take a bunch of guff off of somebody? Or am I just going to make the delivery and move on? I'm going to make the delivery and move on.
Yeah, you're going to get a signature and go forward.
And another thing is, I actually have relatives who have MS or other things that they appear intoxicated when they're not. And so then they have to try to reject their delivery. You know, I don't know. I think that I would be open to just striking that little paragraph.
I was going to ask that question. Are we in a position where we can make a change like that?
Again, Yvonne Navarez Goodson for the record. I think what Chair Wren may be asking is, under some circumstances, if we depart from the language as approved by the Legislative Council Bureau, if the Legislative Council Bureau determines that it's a substantive change, they may require that to go back forward to another hearing and get a revised draft from LCB. However, on this particular regulation with the changes that we have suggested from the revised proposed version, it's certainly not formal advice from LCB, but they indicated that they believed that it was clarification and therefore we could go forward with the changes that we presented. So I think it's okay for the commission to approve the regulation as it wants to. And if LCB gives us any feedback that it's a substantive change and we need to pull it back, we can bring it back in that form. But I don't anticipate that to be the case.
I do think, it's Commissioner Lippman, I do think that we want to protect the interests of the state and at least acknowledging that selling to someone who's intoxicated is not something that these businesses should engage in, similarly to if it's at a bar. And so I do think making an affirmative statement and acknowledging that that is a problem and shouldn't happen, I think is a positive thing. I do think it's challenging to try to determine that, but at least there is a mechanism here and an affirmative statement.
I have a thought, Commissioner Byram. For the violations, how would a violation of that be identified if not for an accident or a complaint, or I don't know? You're not going to have an auditor of the state swoop in and double check somebody and make their own determination. Hey, he was intoxicated. You shouldn't have left. I mean, how are they to be busted and be penalized on that? It just doesn't seem administrable unless there's some accident and someone's looking to find who's responsible for having delivered to this guy who then decides he couldn't drive to go get the liquor, but now he's going to drink it and then drive. I just don't. I don't see how it's administrable. If you want to leave it in, I understand that it sends a message, but I think if it sends a message to hold someone responsible, and we've got penalties in here, then I think it just opens us up to a lot of ambiguity.
Unfortunately, I think you're right that if it becomes an issue, somebody passes away, somebody harms someone else, someone drives a car. So I think that's when it becomes an issue.
Are you then thinking that should be left in for that reason? Mr. Chairman, I'll make a motion to adopt this regulation with the as presented. I'm sorry, regulation number RO 68-21 regarding liquor store retail sales delivered.
Okay, I have a motion and a second for the discussion.
Yes, I just have a question, Commissioner Bursey. I don't know, but is it ever possible to weave a bit?
It doesn't matter.
Go ahead, Commissioner Bursey.
Is it ever possible to weave a bit of policy into a regulation where the language would be that the state does not condone the delivery or sale of alcoholic beverages to intoxicated individuals, and take out the specific language as to identifying them?
You could do it by saying care should be taken that you don't deliver to someone who is severely intoxicated, but
I'm just wondering if there's a ways that there wouldn't be a penalty attached, but that we're offering advice that this might go to what Commissioner Lippman was saying, that we're offering advice that and noting that it's not a good practice to sell to intoxicated people.
I think the penalty, thank you for that, Commissioner Bursey. I think the penalty does hopefully motivate the liquor stores and the transportation companies to train and, to the best of their ability, try to deal with that issue and worry about being penalized. And I hope people are penalized if they're doing it.
Okay, we have a motion, a second, further discussion. Seeing none, all in favor say aye.
Aye.
Opposed?
No, I don't agree with section 3.
Okay, I believe that's just one no, so motion carries. Okay. Yvonne, informational items you're going to handle?
Yes, yes. Section 7, informational items on our agenda. We have 2 items that have been presented to the commissioners in your meeting materials for the penalty and interest waivers granted by the Department for Sales and Use Tax, Modified Business Tax, and Excise Tax, with those dates as indicated thereon. And second part is the approval and denial status report log for the organizations created for religious, charitable, and educational purposes, also identified therein. And we'd be happy to take any questions if the commissioners have them on those informational items.
Questions?
Thank you for sorting them.
Like that sorting.
Yes, I do.
I know, I understand that. Okay, any brief?
Yes, Mr. Chair, if I may, and please accept the apologies of our director who is unwell today, and she is also participating online, but she asked me to go ahead and provide her briefing to the commission. First, she wanted to certainly apologize for not being here with us today, but also wanted to let the commission know that we're losing a valuable staff member. Lizette Arceo's last day with the department will be December 9th. We're certainly going to miss her. We wish her well and best of luck in her new journey. Second, we are working on developing an RFP for the Mint project. Our team has been attending demos, and we have also been meeting with other states to find out about their experiences with their various modernization projects. Next, under NRS 360.137, subsection 2, the department is required to submit the biennial expenditure report to the governor and the director of the Legislative Council Bureau, which was done in November. The next report won't be due until November 2024. The department is also currently working on its annual report, which will be submitted to the governor on January 15th for fiscal year 22. Our economist, Erica Scott, has participated in the Technical Advisory Commission and the Economic Forum, where she is providing forecasts for the major tax types, which are the LET, the sales tax, IPT, MBT, real property transfer tax, and the commerce tax, as well as the minor tax types, the liquor, cigarette, other tobacco products, net proceeds of minerals, short-term lesser, TCT, branch bank excise tax, and the gold and silver excise tax. The forecasts are used by the governor in preparing the budget recommendations that are presented to the legislature. Next, pursuant to NAC 360.390, on December 1st, our demographer Matt Lawton disseminated the 2022 draft population estimates to local government representatives of Nevada's 17 counties, incorporated cities, and unincorporated towns where possible. These local governments have until December 15th to appeal those estimates. And finally, the 82nd 2023 legislative session will begin on February 6th, 2023. That was the briefing from Director Hughes.
Okay, thank you very much. Our next meeting will be January 23rd. Do we have any more public comment in Reno?
No further comment, Mr. Chair.
Further public comment in Las Vegas? Is there any other items anybody would like to see on future agendas?
I would like to currently thank Ms. Lizette Arceo. I don't know if she's still in the meeting, but she has been a phenomenal part of the Department of Taxation. And I'm very sad to see, there she is, excellent. I thank you so much for everything you have done for the state of Nevada. You have been tireless and unrelenting and answered all of our questions professionally and purposefully, and I hope you have decided to go to law school because you're a phenomenal Nevadan, and I hope you can't leave the state. I hope you're staying in Nevada.
Definitely, Commissioner Littman, and thank you so much. It was very bittersweet, but I will be here with the county, so you may or may not see me. I'll be with the county recorder's office, so you know, it's just, you know, it's time and it's going to be a big change for me. So thank you again. Thank you for everyone.
Okay. Thank you, Ms. Arceo. I appreciate it also. Any other comments? All right. I hope to see everybody in January. We are adjourned.
Feel better, Chairman.
I will. Thank you very much.
Sorry.
Alcohol delivery is probably a lot like cannabis delivery.
I know, right?